And we're off. Here we go. Let's move this timer out of the way. Hope everyone's been having a good weekend. Let's see how we're doing with the futures here. The S&P is relatively flat, coming up a little bit, but relatively flat. The Dow is the same. The Nasdaq is the same. Russell the same. Bitcoin, Bitcoin's up a little bit. Not a whole lot. A few $100, nothing really to care about. Crude, it's up a little bit. Gold, it's kind of flat. Bonds are flat. Copper, corn, wheat, all just kind of hanging out. Pretty much a normal Sunday afternoon. Okay, so we have a lot to go over today. I have a page so full of notes, I can't even read them all. They're squished in there so much. I thought this was going to be a boring week, but man, there was actually a lot that went on. We've got a ton of macro news. I ended up making a little chart to kind of show the trajectory of rates and things like that coming up. We'll pull that out a little bit later. Also have some individual stock news and actually a decent amount of crypto news. Also did a crypto project this week. Was talking to a friend of mine, Solemn Fishby. We did a little interview that I'm going to be getting ready in the next couple of weeks to put up on the YouTube channel. Trying to make some more content that can be viewed while the stream isn't online. Actually doing a lot of expanding, trying to get a whole bunch of different things going. So that's the first thing. It's kind of a little experiment to see how that goes. So, okay, let's go ahead and get started. First order of business. What do we talk about every single week? Rate hikes. Every week we talk about rate hikes. Now, it gets a little old, yes, I know, but at the same time, it's extremely important because rate hikes haven't been happening for quite a while. I mean, it's been years since we've had hikes. And each time we do have hikes, it's kind of the same thing. The Federal Reserve ends up pushing rates up relatively quickly and they kind of go past where they should. The market freaks out a little bit. Certain people can't pay their debt back or whatever it is, and it starts to go back down, and then the Fed has to react to that. I don't think we're quite going to get that this time because we have such a crazy inflation problem. The last time we didn't really have high inflation. We just had continuing prices, and rates had been so low for so long that they needed to come back up just to kind of return money back to the lenders basically. But mostly it's just going to put some pressure on the markets, and that's what we care about. So we had a few different Fed presidents this week talk about rate hikes. Now, we had a couple of they're a little bit split on how they want to do it. I mean, they're starting to admit now that they didn't move fast enough and that they're going to need to move a little bit faster in order to catch up with inflation. See, that's kind of the way the Fed works also. Usually the best thing to do is nothing when your average, I don't want to call it a crisis, but when your average incident happens. So what the Fed will do is they'll come out, they'll say, hey, everything's going to be fine. And then usually everything's fine. Because the market freaks out, people freak out. They're very short-sighted. They're seeing, oh my God, stuff's down today. What am I going to do? But the Fed says, all right, let's just wait this out because usually everything's fine. So waiting it out is usually what you do. Like 80 or 90% of the time, you just wait it out. You don't go changing rates or changing policy at a moment's notice because that can cause other problems. So I think they were kind of in that vein, thinking like, oh, we had, a bunch of shutdowns from the pandemic. Things are going to be slowly opening back up. Maybe we don't have to do very much in order to actually get things back on track. But that wasn't the case this time. There was a lot more that was going on than just a little bit of a slowdown, and the Fed should have acted a little quicker. And pretty much everybody acknowledges that at this point. I mean, the Fed won't come out and say that, but they'll kind of allude to it. So let me go ahead and pull out this graph that I've been working on. So there are multiple Fed districts. Actually, let me switch this over to the other screen here real quick. There are multiple Fed districts, and each one of them has a Fed president, and that Fed president will usually have their own opinion about what's going on. So I made this cool little chart with my awesome graphic design skills here in Paint that shows 4 of the Fed presidents' plans for rate hikes. This is what each one of these Fed presidents thinks should happen. Now, of the 4, Bullard is definitely the most hawkish because he wants to get the rates up to 3.5% by the end of the year. That's way above most everyone else. Most of the Fed presidents think that the neutral rate is somewhere around 2.5. And when you're looking at these things, there's neutral and there's restrictive. Now, neutral would be that you're putting rates to a point where it's bringing the economy, or it's bringing it's bringing prices down a little bit, more of a fair thing. It's not putting too much downward pressure or too much upward pressure on the markets. It's, neutral. That's why they call it that. but restrictive means that they want to pull things down faster. And Bullard is definitely saying we need to go restrictive. He said that it's going to be data dependent, which is, the kind of the motto. It's been the motto of the Fed forever. Data dependent, data dependent. You ask them a question, data dependent. It's their answer for everything. So in this case, what we have here is basically each Fed president is in line with the next two rate hikes. Okay, so let's take a look at the chart here. The current Fed funds rate is down here at the bottom left. It is 0.77% at the moment. So that's kind of where we're sitting here going into June. We have a rate hike coming up on the 15th, so looks like a week and a half. Not this Wednesday, but next Wednesday. By the way, I'm going to be streaming that Fed meeting live if I can. I don't know if I'll be able to at this point, but if I have the ability to, I want to stream it live and see what they say because those are usually good opportunities for trades. I don't know if I'll trade anything this time like I did last time because I got pretty lucky last time. So I don't know if I really want to push my luck, but it depends upon what the environment looks like and what they say. So we're going to have to see. So far, all Bullard, Daly, Brainerd, and Mester all think that they're gonna vote for a 50 basis point hike at this meeting, which everybody kind of knows that already. That's par for the course. And then it's pretty much common knowledge that the next meeting in July is also going to be the same rate hike. So they're all going to be voting for 50 basis points most likely, assuming that's what the data says at that time. And that's kind of what we've known. That's par for the course. So that one's going to be coming in the middle of earnings season, though. So that's one thing we definitely need to keep an eye on is the fact that earnings season already brings a bunch of volatility, and we've had a terrible earnings season as far as uh, overhead costs, shipping, profits have gone for these companies. Um, Shipping is a huge problem. A lot of these companies are just eating the cost of shipping because things have gone up so high. I mean, if you look at Walmart is trying to pay truck drivers $100,000 a year to work for them because they need truck drivers so bad. There've been a lot of problems with the logistical side of things. So that is going to be interesting coming in right there because we're going to have a Fed meeting which is volatile, earnings season after having a bad earnings season, which is going to be volatile. So this July is going to be an exciting month. I'm looking forward to that. I want to keep some cash going for that section because that's going to be where some trades are probably going to pop up. We actually had some great opportunities for trades during this earnings season. Even though I don't really have it on the listed on the board here, it's basically over. There are still some companies reporting, here and there. It basically you get earnings the entire quarter technically, but the bulk of it stands in the middle of it. So the July meeting is going to be very volatile. August there is no meeting, so there's no rate hikes announced here. But what they're all saying right now is that September is the key month. That's the key month for all the data. We're going to get, but by the time September rolls around, we'll have put in, another 100 basis points, so this should be 1.7 by that point, assuming that these rate hikes end up being 50s. These are just estimates. These are just what it looks like these Fed presidents are saying they're going to do at this point. So once they know that, then they'll be able to adjust their September and later plan. And September is also usually a pretty volatile month because that's when things kind of reset for the year. There are so many things that restart around here in September. So you'll see a lot of volatility, usually kind of a downward move. Not always, but most of the time, it seems like there's either downwards or sideways movement in September. And then as people come back into October, things sort of pick up again. These 50 basis points are already baked in. But once you get into September, I have 25 to 75 plus for Daly, Brainerd, and Mester because they're all talking about that they could go either way. They said if things looked a little bit softer by the time September rolls around, then maybe they can go with some lighter cuts. Maybe they don't have to pull the lever as hard. But if they do, they're willing to go as high as they need to. And I put 75 plus because they were talking about even some 100 basis point hikes at that point, which, I wouldn't be surprised if they did that. However, Bullard, he's definitely the most hawkish out of all of them. He's got the highest interest rate target out of everybody. He wanted to act sooner, and he wants to be a little bit more aggressive to get this thing under control before it becomes a problem. So I put it 50 to 75 plus because I'm thinking he to get this 3.5% by the end of the year. If we're at 1.7 in July and we don't have a meeting there, we're gonna have to do some 50s. Like basically gonna have to put a minimum of 50 in until the last one, which maybe they can do a 25 if necessary, but it's that's a bare minimum for his target. And I don't know if they're actually going to go up that high because he seems to be the only Fed president that's talking about this 3.5. I think that other presidents have mentioned they've either mentioned it or something about it, and they're just saying that they're willing to go a little harder than they think they need to now if necessary, which is going to be really rough because if they end up having to hit this 3.5 target, we're going to have some serious downward momentum. So that's something we really need to look out for is how serious the Fed gets because they're a little bit split. I mean, if you've got some, they're all pretty much hawkish. Like Bullard is the most hawkish. And just in case anybody doesn't understand what that means, hawkish and dovish are basically whether or not you want to act on rates and things like that to move the market. If you don't want to do anything, if you don't want to change anything, you're dovish. If you really want to change things, then you're hawkish. So that's why everybody at the Fed is hawkish right now because they all want to move rates. They're all under pressure. In fact, one of them actually said that let's see, they need to move on rates because their 2% inflation target is under strain. Or the 2% inflation goal is under strain. So that's telling me that they know that people don't necessarily have all that much confidence in their ability to get inflation in check this year. Some people, I think they'll be able to make a pretty big dent in it, especially if they really jack these rates up like they're looking like they're going to. But you never know if they actually will, and there could be unforeseen circumstances that cause inflation to go even higher. So we have to watch what they're doing when they vote. So in a week and a half, this first rate increase is going to be interesting because they're going to hopefully update the plan a little bit and tell us if this 50 and then data dependent September thing is still on. So that's kind of what we're looking for. We're looking for them to say we're going to do 50, 50 September, see what's up. That's the whole plan right now, and it's kind of been like that for a while. But as time goes on, they're talking about higher and higher targets. I saw a video a week or two ago on CNBC where an analyst was talking about wanting multiple 100 basis point rate cuts now, as in the June and July meetings, to hit this thing harder. I don't think they're going to do that, and when you see that stuff on TV, it's usually a talking point for somebody that's trying to get clicks, views, whatever it is. But at the same time, in this case, I actually do think that it's relevant because depending upon how bad inflation actually is, they might have to hit this really hard, and hitting a 100 basis point hike might actually be the way to go. And this is going to be an interesting week. So one of the things that's going on this week is we're going to have the next CPI number on Friday, and when CPI or something like that comes out on a Friday, I think about what the structure of the week is going to look like. So if inflation looks terrible on a Friday, that's going to cause a huge dump, which I would love. I mean, I love Friday dumps. Those are my absolute favorite, some of my absolute favorite plays because the usually that dump on Friday doesn't always carry over into Monday. It does sometimes, and it just depends upon the market conditions. But if you can get a huge, huge dump on Friday, especially if you could get it from like Thursday and Friday or, the last few days of the week, that you can usually catch a little bounce on a Monday. In this environment, I wouldn't expect it to be that much of a bounce. And also in this environment, I wouldn't say that these rules are even rules. They're just kind of something to watch out for. It's if you get the opportunity kind of a thing. So if I get a huge crash on CPI numbers on Friday because everything looks terrible, then I'm going to look for a slight bounce. Right now I'm really only playing small things. My my thought is the market is so uncertain at this point that you kind of need to be careful with what you're doing, and it's almost better to wait for a sign that it's time to get back into the long side. Now, shorts are decent. I put one on this week, and it didn't end up working out for me because I did it. I had to do it in a short term time span, which is terrible because I don't want that little amount of time. I want to be able to wait a little bit and let the market prove me right because we're basically in a time where we're going to have down moves. Sorry, every few days there's a pretty big down move. It looks like everything's going to be okay. When there are green days, they come up to these same levels and then they just stop. Like they run out of steam at the like you took a buzzsaw and just cut them right at that level. It's so interesting to watch. And actually, we're going to look at that a little bit later. But these bounces that you can get after these huge drops, they're nice little quick plays. They're things I would only recommend if you've been watching the market for a while and you're ready for something like that because these down moves can really go, and if you're too exposed to one direction, you can really get hurt. So I just look for little things here and there. I mostly want to be in cash for these next few rate announcements and whatever ends up happening in the next couple of months. I'm still pretty bearish on the market overall. The long term, obviously, I'm quite bullish on everything, but for now, there's just so much weight that it doesn't look like it's going to pop anytime soon. So the point of this whole thing is we're thinking September. Basically, to make it really simple, you want to think down, down, down through these 3 months: June, July, August, down, down, down. Now it's not going to be straight down. There's always little rallies and bounces, and there's sideways action and uncertainty and all that. But generally, you're going to think that it's going to be more of a down move or a sideways move, which I kind of count those in the same vein because bulls aren't making money, and if you have long contracts to the upside or the downside, then you're losing money. So to me, a sideways day is basically a down day in philosophical terms. So all right, so let's go over all these numbers here. This week we had quite a bit of economic data. Looks like wages are up 5.2%, which is good for workers, but it's also not that great in terms of what's going to happen with the Fed. Now, here's where things get a little interesting. Let's see. Oh, S&P back to 3,800. Well, let's see. Let's close this real quick and take a look at the S&P on the main charts. 3,800. All right, we got a call. I love it when somebody calls a specific number on this kind of thing. It makes it a lot more interesting. Okay, down to 3,800. So you are bearish. You think it's going to drop down to about here. Not a bad place to pick, actually. That's kind of the bottom of that little bounce that happened right there in an area where there's some congestion over here. So I actually like that little spot as far as a downward move. Could it break that? Yeah, I do think it could break that. I'm looking at this whole range right here. If you go back to the beginning of 2021 where this little range was, I'm assuming you picked that 3,800 because it's below this candle right here, but this range is actually pretty telling. So I would say in that whole range between 38 and 37 all looks like a good spot to kind of hit, because there was a little bit of congestion right here, like when I'm on the weekly right now. So yeah, there are a few weeks where it was bouncing off this price, this 3,700 level, and then when it went above it, it was kind of bouncing off it. So it was resistance and then support. So I like 37 as a another little area. So 38 to 37, definitely doable. Do you have a short on, or is this just something that you're thinking about, dogs? That's new. It looks like it's mostly. Yeah, this area is mostly open if it does pierce the 3,800 mark. You're thinking about it. Yeah, I know. I've been thinking about it too. I actually put on a short. Well, I put on an individual short on GameStop this week, and it really wasn't a short. It was more of an iron condor. I wasn't expecting it to do anything after earnings, which it really didn't do that much. It went up, which is too bad because that ended up taking out some of the profit that I would have had. So I ended up scratching out with like a very tiny loss. It was like $20 or something like that. And I would be right if it lasted longer. At least I'm confident that I am, because you never know, and you might not be right. But it didn't have enough time, and I wanted to avoid being exercised. So I made sure, because the only strikes that I could find that were less than the $5 wide strikes were the ones expiring next week. And if one of your short strikes is in the money, which mine was, you stand the risk of being exercised early, even if it's there's still a contract cycle before yours that hasn't expired yet. If you're within like 30 days of expiration and you have option contracts and you have short option contracts, you could get exercised at any time. It's completely random. So anytime I have a feeling about something and I don't have a lot of time left, but the stock overcomes my strikes, I just get out of it. Just take the loss and move, because it's so much better to take, like I said, it was a tiny little like $20 loss. So I'd rather get out of that than have to, get exercised if it lands in between my strikes, and it is the absolute worst case scenario where you don't have the protection, but you also owe all the shares. So definitely something I didn't want to have to deal with. So if I could have waited, if I had more time, if I could have had like 40 days to expiration or something, I would just hold out. Wouldn't be a problem. But since I only had like 10, I didn't want to wait. So yeah, right now is definitely like a short looking market, especially if we have a little bounce at the beginning, like Monday, Tuesday. I like a nice bounce for adding a longer term short on, because right now, if you take a look at the SPX, we're bouncing. So this is a weekly chart, And going back the past 3 weeks, we've basically been bouncing because we had this huge downtrend, right? 1, 2, 3, 4, 5, 6, 7 straight weeks going down. Um, so a lot of bears got caught in here, and I think most of this rally right here is people being squeezed. Because when you see this much red, people, for whatever reason, they get so greedy. They get so into their position thinking, this is it. It's going to finally fall. All those, YouTube videos I've been watching that tell me the world's over are coming true. And there's always a bounce. Even if we're going down and things are terrible, there's always going to be a bounce. I've seen over-the-counter stocks that were literally bankrupt and were getting delisted, just dropping, 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 and they were still bouncing. And it wasn't just, oh, they were bouncing for like a couple of minutes as they went down. Like they would bounce for days and continue to go. So like you never know with these things. When you're shorting, if it's super red already, like you should be taking profits in here. You shouldn't be adding to your short. When you've got 7 straight red candles, wait, 1, 2, 3, 4, 5, 6, yeah, 7. You definitely don't want to be adding to that. Like you want to be, I would be taking, like if I was short anywhere in these first couple of candles, I'd be taking profits by the time it was hitting this little area of support down here, because this would have been a good gain if you were in at 40 like 4400 and you were out at, let's say, like 42. That's wonderful. That's a wonderful short. But I wouldn't be, after that, because some people will say, oh, it broke support, so now it's time to get in there. Yeah, I don't know. That doesn't really work that well for me. And everybody has their own method of trading, so it might work for other people. This one though, no, I wouldn't do that. I would just take profits. I'm all about trying to be safe and just taking what you can, because when you have gains, it's better to take them. So what do we got here? I just spot trade, don't do short or long. Yeah, I get you. I get you. It's not a bad idea. I'm mostly right now kind of staying out of a lot of stuff just because I don't. I'm not as certain about things. Like I think that there's going to be a general downtrend in the market, but I don't necessarily have any trades that I really, really like at the moment. So I'm just kind of waiting for most of it. See, but I did buy some stock and some crypto a week ago, but sold everything the other day, thinking it will dump lower. Yeah, no, I actually I've done the same thing. There are a few trades I was in that I ended up dumping because I'm thinking that it's going to go lower too. I mean, it's kind of just the way it looks right now, and with everything we have, all the weight we have on the market, I think it's a safe bet to say that it's probably going to keep dumping. But at the same time, I've also been adding to my long positions. So my philosophy is I like to trade and invest. It seems like a lot of traders or a lot of investors kind of only do one and they don't like to mix them. But the way I see it is one can kind of help the other. Like if you're investing, that's great while you're going up. You're making money while you go up. But while you're going down, you lose money. So it's nice to be able to trade and recap some of those losses and be able to put them into your long positions and build them up as you're dropping. So that's kind of my thought. Right now, we're in a buyer's market. It's a great time to buy. I've been buying for the past like 2 months, and I'm not buying a lot. I'm just buying a little here, a little there, in all the positions that I actually like. And then in my other account, I have 2 trading accounts. In my other accounts, I'm making trades just to see what I can get on those. Like last week, was it last week that I got Wendy's? I can't exactly. That was the week before. So yeah, I traded Wendy's and took some of the profits from that and added to my long account. Just let's see. Oh, what you got in here? You got a tiny profit. And you wanted to buy lower. It's greed. Well, yeah. I mean, you always want to buy lower. It's you're never gonna hit the top of the bottom. And I'll tell you why you're never gonna hit the top of the bottom by telling you this story about when I hit the exact top. It's I hit the exact top because I was lucky on crypto last year when it hit 64K or whatever the actual peak was the second time, not the first time. That might have been maybe 68, 69. But whatever it was, I remember I sold on the actual peak day before it dropped. Like the very next day was when that drop started. That has been going on ever since. And of course at the time I thought, oh, I know what I'm doing. Like, no, you don't know it. I got extremely lucky, and I actually did know that. But a little of me thought like, oh, I'm gonna catch this bounce. And as it was dropping, I started to buy back in a little bit. So it wasn't like perfect. My average is still really high. But the point was, I got extremely lucky to do that. And I was surprised because I've never really done that before. Well, at least with crypto, I had one other similar kind of experience, but it wasn't quite as good. So just, hey, if you got any profit, even if it's a tiny profit, that's good. Because one thing I can say is the longer you're in the markets, the more you appreciate a profit when you actually have one, because you're going to run into some times where you just lose and lose and lose, and you want to give up, and everything's terrible. But if you get through those times and you learn how to be more responsible with your money and how to trade, like the way I say it, trade like you're going to lose. Don't put any more in than you're okay losing. You get a lot better at it, and you can deal with those kind of things, and you won't be out of the market because you made a bad decision. So take your tiny wins, just build it up over time. It's like the tortoise and the hare, right? Like slow and steady wins the race. Let's see what it's. If S&P drops to a 35, 38, you might buy and hold long terms. Yeah, I mean, anything below 4,000 is nice in the S&P. Like I even think right now is okay to be looking at stuff. Like I would say maybe not going too hard at buying anything, but like as this drops, like the lower it goes, the more I want to be in stuff. So this is a great time to buy. Absolutely, like 3,500 would be great. Let's see where are we if we hit 3,500. Okay. Oh, see, this is the spot that I was thinking about for um, a really good fall. Like we've got some good congestion right here. This was the recovery from the pandemic, and I think this was about September. August, September. Yeah, so right at the end of August was when we peaked here, and then that was when we actually had real volatility in 2020. Because it seemed like after the drop, there was kind of this uptick, and there was definitely volatility on the uptick. But if you look at it, it was moving really quickly. And then there was a little congestion here in the middle of the year because people thought, oh, wow, we recovered most of this. So there's got to be some problems. Nope, no problems. It just kept going. So this was the first time that there actually was any kind of fear, and it was because we just past the old highs, and that'll happen anytime you pass old highs. There's people that'll trade breakouts, right? And that's what they're looking for. They're looking for something to get up to a previous high and then break through. With me, I never have luck with breakouts. Those breakouts don't really work for me. I like to trade before or after the breakout because I've never been able to get it to work right. Some people do, whatever. Everybody's got their own trade style. So yeah, this is a nice little area. In fact, let me switch this to the SPY so we can take a look at some volume. Volume is kind of important on this chart for sure. So we're looking at this little area right here. This was this 35, which translates to 350 on the SPY. You can see this area it has a little bit more volume than average. This little green line down here is the average amount of volume. So you can see it's like just barely peeking over. Let me bring this chart up. So it's a little bit above that, but it's not anything extreme. But if you look at the volume profile over here, which I've actually been using a little bit more lately because it helps me kind of represent things a little better, you can see that there's actually thin volume when you get to this point. So this could drop a little more right here actually. I like the volatility as a place to put some technical analysis in and say like this is an area of support, which it kind of would be, but because the volume is so thin, I don't think it would really hold as strongly until it gets below that and starts getting into all this stuff. We get a little bit more once you get below that point, and obviously there's a lot of volume way down here. But if we're getting down into this territory, like down into the median of the standard deviation channel, which is what this is right here, then I mean we've got some problems going, which isn't necessarily bad. It would be great if we came all the way that low, and we definitely could, but I just don't see it as all that likely. I kind of see this same pattern continuing over the next couple of months as these rate hikes come in. So what do we have here? I was reading something that the government will print out more stimulus. Maybe that's what will cause the markets to pump higher again. Their excuse for giving out stimulus is to shit economy and help out the poor. Yeah, see, that's the thing with stimulus. Sometimes it does help with the market. Like in 2020 and 2021, stimulus really helped with the market because there was also a mania going on, right? Everybody was already getting into the market before stimulus even started to come out. Because I remember initially in 2020, the stimulus was delayed a little bit. Like there were a few months that checks were supposed to come out, but they were delayed or something. I don't remember the specifics, but once the money came out, it pumped right into the market and shot things up. So you're absolutely right to think that is a possibility because that could happen. And anytime there is federal stimulus, not just stimulus on the state level, but federal stimulus, there is the chance that people will pop into the market. However, there is a caveat this time. This downward action in the market has weeded out a lot of people that got into the market that were new. So this pandemic drop right here and the subsequent rise brought in a whole bunch of new traders. So somewhere in this little mid part of 2020 and on is when people started to come in. And I think the bulk of them came in towards the end of the year, the end of 2020 and the beginning of 2021. And if you look at this chart during that time, it's just upward movement the whole time. time. And it's a very clean upward movement. I mean, you can see that this, I'm on the weekly chart right now, and it's kind of bouncing off the 21 moving average just for a whole straight year. So people that got into the market during that have never experienced anything like this. And we've been at this for 6 months now. I mean, this has been a 6 month bear market, which we haven't seen in quite a while. I mean, even the pandemic drop only lasted a month. It was like the end of February to the end of March, and then it's just been up ever since. So this like long, drawn out bear market is causing these people that got in during this time to hurt. They're in pain. I mean, they've been playing the market the way they did in 2020 and 2021, which is just to keep throwing money at it. Just throw more money in. I mean, if everything's going up and there's a mania, that's the best thing you can do. Just add money to it. But when you get to one of these drops and you think you're buying dips and they just keep getting crushed, well, you don't know how to deal with that because you've never been in one of these positions. So the stimulus may not come back into the market quite as much this time. People aren't quite as high on the markets as they were the last time. So that's the one caveat I would think about with the stimulus. Also, the other part of the stimulus was from loans that businesses were using to buy stock back. So if it's just stimulus checks and it doesn't have a business aspect to it, which it may, I don't know. I would have to research it because I've kind of only heard little rumblings that, like you were talking about, nothing specific yet. But if there's nothing big for the businesses, that's another thing that may not pump the markets as much. Because the other thing that happened was businesses were buying tons of stock back. They were getting loans. Valuations were looking better. The Fed was buying junk bonds, which they'd never done before. So all companies that had terrible debt, they could just sell it to the Fed. I mean, there was just so much. So it wasn't just the stimulus that was pumping it. There were just tons and tons of factors there. So let's see what you got over here. You think Biden will do another stimulus if he runs again? I think that's probably a pretty good guess. I mean that's kind of what helped last time. So they're probably going to go with the same tactics this time. Let's see if they do that. Maybe it will be enough to pump to 4,400 and then a massive dump again next year. That's possible. It could see where if we go to 4,400, that would be back right about here into this mess right here, which I can see that. So that's my thought too. If it does bounce, this congestion up here is kind of going to act like some resistance because this is where things were bouncing off multiple times. I mean, this almost looks like, I hate to say it, a head and shoulders right here. I'm not really a technical analysis guy, so I don't like looking at these patterns and calling them those things. But other traders are going to look at this and see something like that, and some of those traders might react to it. So this area right here, and it is high volume. You can see that this volume spike right here is actually at the 4,400 level is actually pretty high. So this could be an area where people definitely get in or out. Yeah, there's that little support or that little resistance up there. I do think that to bounce like that, we're going to have a catalyst. So I don't necessarily know if there's gonna be a catalyst in this amount of time. Let's see, bring up the little graph again. I think I already closed it. Never mind. The graph of the Federal Reserve meetings. We've got one coming up in a week and a half, and then another one coming up next month. And that's going to be, if those go according to plan, then I think everything should be okay. But if they don't go according to plan, then we could have some serious movement. So that's what I'm looking for next. Not this Wednesday, but next Wednesday. I want to see what they're doing there. But for now, my thought is this little bounce that we're having might get crushed. I don't necessarily know. I mean, I went a little short on some things this week, and they didn't really pan out. I'm thinking about trying again this week if we have more of a bounce. But I kind of think this bounce might be, it might have been Friday, might have been the day to get it. But I don't necessarily know if that's the case. So because look, we did hit this area that actually has a good amount of volume right here. So this is resistance. Not to mention, there's not really anything positive that's bringing the market up right now. There's just a whole lot of Fed news about the Fed, news about inflation, and like I said, we've got CPI coming up on Friday. So CPI is a big one. The Consumer Price Index is going to tell us what inflation is for, I guess, May at this point because we're in June now, and that number is what people are going to be looking at to whether or not they want to go, long or short in the short term. And these things, these numbers, inflation numbers and things like economic data, they should be really important, but they usually only really affect the market for a couple of days as far as their initial impact. Like they weigh on people's minds, and people will make investment decisions based on them over time, of course. But the actual trading action usually only lasts for maybe even just part of a day. Sometimes the market doesn't react to the numbers the way you think. So we're gonna have to see what's going on. If like some of the experts seem to think that inflation has already peaked, which they've been saying for months. So you never know if that's actually the case. But if it has peaked and this inflation number actually looks a little bit better, then it's going to look good for the markets. So let's see, what do we got going here? I got a whole bunch of stuff to talk about. I'm going to go down the macro stuff. So yeah, wages are up. That's what I was getting at with the point right there. So wages are up 5.2%, which could add pressure to tighten rates even more. So that's what really is unfortunate about this whole thing. The hotter the labor market is, the more likely it is that the Fed is going to have to act faster, which will bring the markets down. There's a saying, I think it's like Warren Buffett or something that said it, that interest rates are like gravity and they can bring everything down to it. So the higher you turn up gravity, the harder things are going to come down. So in this case, we've got wages are up, unemployment stayed at 3.6%. The estimate was 3.5, so it wasn't quite as down as they were expecting. So I mean, I guess that's somewhat helpful in the rate camp idea. Like, are they gonna? It may help them not raise rates quite as much if for that one. So wages may want them to raise more. Unemployment may want them to raise less. So they may cancel each other out. Non-farm payrolls, those were up above estimates. It was 390,000 new jobs as opposed to 390,000 as opposed to the estimate, which was 325,000. So that was a little bit hotter than expected, which is another coin in the can of they're going to raise harder than expected. So let's see. The other thing that I saw, and this kind of I don't know why this flew under the radar in the market so much. I didn't see a whole lot about it, but maybe it's not true or whatever. But I saw a headline that said something about Moscow was thinking about negotiating peace finally with the Ukraine, which that would have a tremendously bullish impact on the market. It would have a bearish impact on oil, which is which I've been watching for a while and I missed out on getting into because it's already so high and it's been high since I've wanted to get into it. I just don't like getting into things that are up so much. Let's see, prices for goods and services go up during the summer. Yeah, especially if the Ukraine war doesn't stop suddenly, gasoline prices always go up in the summer anyway. So we're looking at all this plus the summer hike. I mean, that's going to be expensive. So energy and food are the serious problems. That's why when you see the CPI numbers, you'll have two of them. You'll have one number that includes energy and food, and one that doesn't, because those are the most volatile sectors. We'll see what that's going to be. So yeah, if Russia ends up negotiating peace, that would be incredibly bullish for the market, and that would help a lot with the inflation and the supply chain and that kind of thing. But I don't know if that's even true. It's just a headline that I kind of saw within Thinkorswim. I also saw some stuff about Putin might have cancer. He might be losing his eyesight. He might have survived an assassination attempt. Like, there's all kinds of crazy stuff going on right now. So as far as the Ukraine war goes, I just put that on the whole uncertainty section. It's so difficult to tell what's going on with that. Let's see, meat and fish has gone up. Most other food hasn't changed that much. Yeah, some food has, some food hasn't. I've noticed in my area when I go to the grocery store, some things are still relatively cheap. Some things have definitely gone up, but a lot of this inflation cost has been eaten by the companies. See, that's the thing that is kind of interesting to me, because usually you think that they pass them on to the consumers right away, which they are. I mean, a lot of that cost is getting passed on to the consumer, but a lot of it isn't, and that's why earnings were so bad this season. They were paying so much for shipping, and they were paying so much to get their goods, get the goods that they wanted. They had to like substitute some things, and then some stores bought too much, and they had too much inventory that they weren't able to sell because people weren't buying those specific things. So the whole thing was just a mess. And I mean, that's why when people are talking about all-time highs, I have a hard time figuring that out right now. Like, I can't see that very easily because there's just so much clouding the market. I mean, there's the Fed, number one, inflation, number two, supply chain, number three, Ukraine war, number four. There's just so much. And a year ago we had super low rates. We didn't have any of this stuff going on. Inflation wasn't that bad yet. It was moving up, but it still hadn't gotten there. So there was a bunch of upward pressure on the market, Right now, yeah, mostly down. So let's see what else we got going. All right, so getting to the Fed, we already talked about that a little bit. Yeah, Fed governors were talking about 50 basis point hikes, not surprising. So Daly says he doesn't see a recession, and so does one of the other. I wrote it down somewhere else in the notes. I'm not sure where, but one of the other Fed presidents said that they don't see a recession either. So that's actually a good sign if multiple Fed presidents are kind of saying they're not seeing that. It might just be because they're trying to quell fears, but at the same time, I doubt it. I think that they're actually looking at the reality of our situation, which is that a lot of things that are bogging us down right now are things that could be fixed quickly and might end up clearing up right away. No recession, but still inflation. Yep, pretty much. I mean, we're definitely gonna have problems with inflation for a while. Even with the rate hikes, even if they up the rate hikes a little more, we're still gonna have problems with inflation because that takes time to clear out of the system. Recession will hit harder within the next few years. It might. It might. That's always a possibility. I'm not sure if this specific set of factors will become a recession. I mean, we are, and that's the thing. We could have a recession with this next GDP number, right? Because the last GDP number we got was negative, and the definition of a recession is two negative quarters of GDP. So we could have a recession, and it may not be much of anything. If we get two quarters and then suddenly everything else starts going up again, then it may be a very little recession. Let's see, and that's when they'll introduce digital currencies. Perfectly planned. Yeah, digital currencies are. That's the thing. It would be the perfect time to unleash those things. Would be when things are not looking good. Like, oh, look, everything's crashing. We have this nice little fix for you right here. Oh, but it also comes with a social credit score so that we can turn off your ability to buy things if we don't like what you say or do. So there's all that goes with it, man. It's a whole. It's an interesting world we're kind of going into here with these currencies. But you know what? It's a necessary evil. It's just part of the advancement of the human species. So we're gonna have to figure out how this goes. And it could definitely be another Ponzi scheme. I mean, how many cryptocurrencies are Ponzi schemes and have been Ponzi schemes? A huge amount of them. Not all of them. I mean, there are a lot of good cryptocurrencies out there, and there are a lot of people trying to make them better. But there are a lot of scams too. And it's the temptation to do stuff like that is great with people that are corrupt, and there are a lot of corrupt people. So let's see. EU is trying to force ESG on everyone at the moment. Yeah, ESG is kind of like coming in. See, there's a mixed bag of ESG. There's like a political thing behind that where some people are, thinking about it from more of a political side, and then there's the whole activist investor side of it. But yeah, ESG is I don't think it's going away, honestly. Like I think that's just going to continue. I mean, even Tesla getting taken off the S&P ESG list, I think that was more of kind of a spat between two people rather than Tesla actually deserving to be off that list, because like they make electric cars and they're super successful. So, and it's a place where people really really want to work, and they're trying to build everything. They're trying to usher in the future of electric. Not just cars, but their entire power system, their insurance system. It's a whole thing. So yeah, we'll have to see how that goes. I have some news about the EU too. The eurozone hit record inflation in May, 8% year over year. So the other day, they actually people were freaking out about that a little bit because the Europe's inflation is really bad right now. I think the United States was coming in at these 8%, 9% type numbers too. So it's about the same pretty much everywhere. But it may be a little worse in Europe. I'm not really sure though because they have so much more. I mean, they have the whole Russian oil thing to deal with. So that's really weighing them down right now. So what else we got? Let's see, don't worry, China will support Tesla. Oh yeah, I mean yeah, and Tesla's not going to say anything about any of China's practices too. You notice that? Like, oh yeah, no, we're just not going to say anything about any of these hot topics because we have so many factories, or we have a factory and all this nice stuff in China. So yeah, Tesla's making their rounds. So let's see what else we got here. We talked about the neutral rates. We talked about the Fed presidents. Okay, let's get to oil. All right, so May oil production was up 170K barrels per day over the April numbers. Looks like 10 OPEC members are bound by a deal to increase production over a certain price, or they're trying to hit a goal. So a lot of these companies don't want to produce more oil right now. They're pumping it like crazy. I mean, all the rigs are basically at capacity, but these companies want to sell it as slowly as possible because they're loving the way it looks right now. Here, let's take a look at crude real quick. Open up the crude chart. I mean, look at crude is at almost all-time highs. Like the last time it was this high was in 2007, right before that huge crash, which that's something to look out for. Oil prices tend to tell you things sometimes. Not always, not always. Like in 2014, 2015, there was kind of a bear market in the S&P. It went sideways and a little down, but look what happened with oil. I mean, oil was kind of what was dragging a lot of that down because other companies weren't struggling in the same way at that time, but oil has a huge, huge effect on the market. So right now we've got these really, really high prices, and that's what some people are saying. The doomsday sayers are like, oh, we got a recession, oil's up, that means recession's coming, which sometimes it works that way, not always. It's something to keep in mind, but it's not something to think that this is definitely going to happen. It doesn't always happen. That's one thing I want to push with this channel is like I'm not a financial advisor. None of what I'm not going to tell you to buy or sell any specific thing, but what I'm going to tell you is just look at everything as if it's a piece of information and not the actual plan and the way it is. Just think like this because this is this way, it is likely that this other thing is this way. Not this is this way, so this is definitely this way. You have to think like, okay, maybe it's this way. That's the important thing. Let's see what we got over here. They can't completely get rid of oil. It will take them a very long time to get rid of it. Yeah, because it's not just about powering cars and things like that. I mean, we all know it's like cars and plastic and stuff like that, but there are so many chemicals that are derived from hydrocarbons. That are being pumped out of the ground. It's the number one, energy. Definitely, there are a lot of places that need oil. We just don't have the renewables to come anywhere close to the amount of energy that we would need to power those things. So there's that. And then there's just the sense that we're already momentum for oil is already built up. Like we've used it so much that so much equipment has to be replaced in order to get rid of oil. So that's going to take time. It's not just like one day, oh, it's done. We're just moving over to renewables, no big deal. Now there's a lot to be done on the transition, and it's going to take years, decades. For sure to do all this stuff. Like I think it's doable. I think at some point we're going to be a lot less reliant on oil. But I think oil is going to be kind of a different thing to us. I think it's going to be more in the in the material science sector more so than the power sector once this goes in. And I'm talking like 10, 20, 30 years down the road, whatever it is, maybe more, maybe less. I don't know. I'm not an expert on oil, but I do know that we're doing our best to move in the direction that our species has been going, which is, towards the future in a hopefully more sustainable way. But we also can't knock the fact that it's helped us. Like we demonize oil and everything because oil does have a lot of problems and it is damaging to the environment, and the financial system is stuck to it and all that. But at the same time, it's also allowed our species to move to where we are today. It's been a piece of our history. So it's like I have respect for it in that, even though it is a kind of a dirty way to power it. It's also been kind of an amazing thing for us too. And as in the material sector, it is a very amazing thing. There's a lot of stuff that comes from oil. So we'll see what happens with oil, but I like oil, man. I was so upset that I didn't get into oil soon enough. Like I was looking here. Let me see if I can let's pull up USO real quick. I was looking, not slash USO. I was looking at USO back in, before it split, and it did reverse split, by the way. So this bottom of $16 was actually a bottom of like a dollar or two. It wasn't quite that high. When charts split, they don't show you the pre-split amount. It just shows you where the chart would go as if the split, never happened, as if it was always that way. So this was like $2. I remember buying it at like $2 and selling it at 3 or 4, which was just cool at the time because it went down right after that. So it was somewhere over here, like in these red candles. But ever since then, it's just been up, up, up. Even before we had the Ukraine crisis, I mean, and that's what shot it up. Like you can see, this was back in February, yeah. So Ukraine happened somewhere around here, and this is where the green candles really started taking off. And if you look, there was some resistance up here for quite a while. I mean, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. So for 12 weeks, it wasn't passing this point, and it's only recently gone through it. In fact, let's switch this to the daily so I can see what it looks like on that kind of term. Um, It looks like, yeah. See, now you can see these little bumps a little easier. It just bounced off that point every time, and I thought about when it was down here at the moving averages getting in, but I just never did anything on it, and I'm kind of regretting it because it just keeps going. And now that it's up, I don't like buying stocks when they're this far above those kind of levels. So I'm just not going to touch it, because I don't know how to play it, man. I'm not a breakout person. Other people might be breakout people. I'm not. It doesn't go well for me, so I'm just going to let it do what it does. Let's see. Have you ever invested in a company and had your shares frozen because of a company name change? Happened to me recently. I wanted to sell, now stuck. Not for that reason, but I did have. I actually bought some shares in Luckin Coffee. I don't know if you've ever heard of them, but they were back in like 2018, 2019. They were supposed to be the competitor to Starbucks in China. They faked a bunch of earnings reports. So they were like a $5 stock. Yeah, you haven't heard of it. Yeah, I know why you haven't heard of it because they're out of business or they've been kicked off the stock exchange for shady practices. Well, what happened was they were like a $5 stock. They had this what looked like an amazing quarter. The stock shot up to like the 40s or 50s, and I remember thinking, "Oh man, I should have gotten into that." And then it crashed because these reports started coming in that like maybe the stuff was fake. It hadn't been confirmed at this point, but they thought like these numbers don't look right. They might have cooked the books a little bit, and sure enough, they did. So the thing when it dropped, I bought a few shares to say, "Hey, let me see if I can catch a bounce real quick." Now it got frozen, so my shares were stuck. I bought them at a low price, so it wasn't that big of a deal, and I didn't put that much money into it because I was just kind of messing around, so it wasn't really a big deal. But the fact that they locked it up for like I don't know 3, 4, 5, 6 months, whatever it was, maybe it was less than that. But I remember those shares were just sitting there for a while, and I thought, man, what am I going to do? And if you think about the people that are stuck in oh, I can't remember the name of the ETF, but it's the Russian finance ETF. It was down. I was watching it as this conflict was going on and thinking about shorting it, which I should have early and then gotten out quickly because once it froze, then you would have been stuck. So yeah, it does happen. You got to be careful with stuff. So check out DeFi. Is that the company you were talking about? DEFI? No. Unless you're talking about decentralized finance and not an actual ticker. DEFI. Let's try that one more time. Nope, not seeing it. Not getting it on there. Is that a cryptocurrency or is that or something to do with blockchain or is that an actual stock? Because I'm not getting anything for DeFi on there. It's a ticker and it's DEFI. That's I'm not getting that one. Crypto company. Is it an over-the-counter stock? Is it an OTC? Because sometimes I don't get the all the same OTCs on here. I can check my other broker, but it does not look like it's coming up. Let's see. No, it's on the Neo exchange. Ah, okay. Yeah, that's why it's not going to be on here. I don't have that. So mostly looking at a lot of these. I'm not looking at as much crypto stuff. I have some crypto. I need to actually get a crypto broker because right now basically all the crypto I'm buying is on Robinhood. And yeah, OTCs. I don't usually mess with a whole lot of OTCs anyway, and the reason is because OTCs have a different reporting standard than most stocks. So normally what you'd be able to do is go look up their SEC filings and see what their cash flow looks like, whether or not they're in debt, their assets, their liabilities, how much debt they have and when it's due. So all that stuff's really important to me to make sure that a company is in good health. But with OTCs, you don't always have to report that. So it's a regulated company and there is some reporting involved, but you don't find the same filings that you have with non-OTC publicly traded companies. So if it's in that market and I can't find anything about it, in fact, here let me show. Let's do an example real quick. Let's see if I can find it on OTC markets. So DEFI, it might be on there. Uh, Not even listed on here. DEFI. Yep, it's not on here. So I wouldn't touch it if I can't even find it. Because usually you can find it, but they just don't have the financials. So yeah, I don't know anything about it, and I'm not touching it. And it doesn't mean it's a bad stock or anything, but it just because they changed their name to Valor. Oh, is that the old ticker symbol or the new ticker symbol? Because that might be why it's not coming up if it's the old one. Or if it's a new one and it hasn't gone through yet, but the stock sticker is still DeFi. So it's the same ticker, but they changed their name. That's weird that you got locked into those shares like that if they kept the same ticker but changed the name, because usually that stuff updates automatically. That's a little odd to me. That might have been because of a reason, because of something on that exchange, or because that stock was weird. I don't know. So yeah, we'll move on from that one. But yeah, so that's the other thing too. I do this every Sunday, and I want to talk about tickers. So bring stocks you want to talk about. A lot of crypto stuff I definitely want to look at because it's part of the thing. I own crypto. I do like crypto, but I don't know as much about it. So it's more anything if, like stocks and options are my main concern. And any of the main cryptocurrencies, the more popular cryptocurrencies, all that stuff will be more what I'm usually talking about. But this is something I'm actually going to write that down because I want to look into it. I've been trying. If I learn something, if there's some stuff I'm not into, I don't know anything about, I write it down and I take a look at it later. So I'm going to write down DeFi, that's interesting that they were able to get that name. Considering decentralized finance, that's the acronym for it. So yeah, let's see. Okay, so let's take a look at some of these stocks. There's a bunch more macro news, but I can barely read these notes, so I'll have to get back to it later. Let's take a look at some stocks real quick. Some of the stuff I was actually looking at. So we had some earnings coming up this week. What you got there? Wonder and Big. Oh, BIGG. Are you trading a bunch of penny stocks and stuff? Look at this BIGG stuff. I know them. Look at this chart, man. See, this is the stuff you're talking about here. Like, oh, this is disgusting. This is disgusting. Look at this chart. Stock. Look at the way it trades. Oh, it's terrible. Yeah, I don't any of these like sub penny stocks. Yeah, I definitely don't mess with those. I actually started out doing penny stocks, and it's not for me, man. Penny stocks are so hard, and the reason I don't like them is because it's more likely that you'll find a scam, and a lot of these companies are also they're already in the toilet, so they're doing things to keep their company afloat at the expense of their stock. So they're diluting their shares by having financing after financing. They're pumping out news on their own, but oops, sorry, gonna get my kid's over here pulling out my pens and stuff like that, so I got to move that out of his hands. But yeah, these penny stocks, they could do some shady stuff, so I don't mess with them quite as much. I really wish I could get one of these stocks that's a sub penny stock, put a ton of money into it, and just have it go to like $1 or two. Gosh, that would be amazing. But I don't know enough about these to actually do anything about it, so I don't touch those. So what's another one? WNDR. I don't know that one either. WNDR, that one's not coming up. Maybe one. WONDR. See if that comes up. Oh, wait, hold on. That's the name of the company. There we go. WNDR. WONDR. So, Wonder Gaming. Is that a gaming company? Legit crypto companies over the $4 when the market was up. Yeah, we'll have to see some of the gaming companies I like actually. Any of these projects that actually have some kind of utility are great because when there is a drop like this, when there's a bear market, one of the things that have utility are going to be the ones that survived. That's what's happened over the last couple of bear markets. Is there have been times when everything dropped, but the ones that had real use started to come back even as the rest of the market was still going. So I'm going to look into that one too. I'm writing this one down. WNDR. So I'll have to check that one out too. All right, definitely some stuff to look up. So thank you for bringing those to my attention. Yeah, and I do know big. I don't touch big. I'll leave that one leave that one alone. Let's see. Wonderful is WNDR. I wrote one. Oh yeah, I wrote that by accident. Okay, I see you. Yeah, it happens. So I tell you what, since you're all about crypto right now, let's do the crypto stuff first, and then we'll get into the other stocks. So the first thing I wanted to talk about was New York is working on some legislation right now. Oh yeah, Coinbase. Yeah, definitely. I look at Coin. Well, actually, let me put that on my list to talk about a little bit. Coin. They had earnings a while ago. I talked about them a couple weeks ago. They're, see, I'm like now that Coinbase has come down so much, I like them a little more. In fact, let's take a look at them real quick since we're in the crypto space. Look at this terrible chart, man. Since they IPO'd last year at what $300 or whatever it was, and jumped all the way up to the 400s. This is what I've been waiting for. I mean, I like the way this part looks down here because if you look at the chart, yeah, it would kind of hit these little areas of support and trade sideways for a while and look like it was coming back, but then keep going down. But when you see something like this, like these huge drops, and it's kind of it bounced back up and it's going sideways in a smaller little channel right here. It's kind of hanging out. That I like that as a possible area of support, not for sure, because this is very dependent upon the market. I mean, you can see this is where they had earnings right here, and they weren't great, but they weren't terrible. I mean, it bounced up enough to get out of that after earnings. I mean, it was pretty terrible to be honest, but it wasn't as terrible. It wasn't terrible enough to keep the stock going. So what you got there? There's another one that has coin ticker. There's another OTC. Yeah, if you're talking about the actual ticker coin, this is a big company. This is Coinbase's actual stock. So this is one of the ones I do like because you can look up their information, which is great. The ones I mentioned here are OTC, I believe. Yeah, some of these other ones are probably going to be, but Coin isn't. So Coin, now that it's down in the 60s, is so much better than buying it in the 300s. I would when it IPO'd, I wanted it, but I didn't. I just don't like spending this much for shares, like $300 a share or more. That's too much to go for me. I mean, I'm trading mostly with a small account, so I don't like to deal with that. But when you're down here in the 60s, like sub 100, now it starts to become interesting, especially if it kind of starts to base right around this little price area. Because if you look at this volume profile over here, which is what these sideways lines are, this red line is showing you where the biggest volume is, and that's right where it is right now. So there have been a lot of shares that traded hands right in this area, which is what I like. That's what you want to look for when you're talking about support. So there's a lot of people that do technical analysis and just look at the way the candles are shaped to look for support. Like they go, okay, this is, it looks like it keeps hitting this point right here, so that's support. Yeah, I mean, yes, that you can say that in some ways that that's support. I mean, first of all, technical analysis is the same thing as astrology, right? It's just a bunch of made up stuff based on the way things they look. Sorry if you believe in astrology, but that's kind of what it is. The same with this stuff. It's these patterns can become things that you can trade, but they don't always do that. So what I like to look for is if I see the chart looks like it keeps hitting an area and bouncing. What does the volume say in that area? And right now, this actually is a volume average. I don't have it set. Let me set it back a little bit. Yeah, 200 days. So I'm going to set that to like a volume average of like 20 days or something. Actually, let's do 5 days. Okay. Apply that. All right, now we can see the volume. So the volume previously was a lot lower than it was right here. So this is what I really like. This huge spike going to about 60 million shares traded hands in this little area right here. That's a wonderful sign. Especially if this keeps trending down a little bit, it would be a really good buy. Because the other thing is we're in a crypto bear market right now. So you want to think about what's going to happen the next time we have a crypto bull market. Stocks like Coinbase right here will have so many fair weather fans jumping on just because it's crypto related. And that's what people do. I mean, like the whole thing with 2021 was a bunch of people jumped in that didn't know what they were doing and were new to the markets, but were basically gambling and were having fun. And when markets go to that extreme, that's when you can make a bunch of money. But you have to be buying and making moves during these bear markets when it sucks. At a bear market, you don't know how long a bear market can last. I mean, it might last a couple of months, but it could also last years. I always bring this up just to show you. So let's go back to the XPX real quick. If you look at the SPX, and let me change this back to quarterly. Where's quarterly? Let's change this back to quarterly. So this is going all the way back to the 20s, I think. When did it start? So yeah, 1929 would have been, or 1928 would have been the first year. So you can see, in the Roaring 20s, everything was up. Look at all these green candles. This is like years straight of green candles. But the bear markets that started in 1929, the Great Depression, lasted 1, 2, 3 straight years. Right, so you were in a bear market for 3 years. I mean, we've been in it for 6 months. So basically, each one of these candles represents 3 months of time, which is 1 quarter. So right now, we've been in kind of like two of these candles. Everything we felt for this whole year is two of these candles. So a bear market could last that long. But here's the difference between that time and now. There was so much risky stuff going on in 1929 that caused the market to crash. There was a huge amount of credit expansion. Like people were getting credit for everything. There's so much borrowing going on. And these loans, it was kind of like 2007 where there were all these loans being let out that weren't able to be paid back, but it was more extreme than that. And it was in multiple industries because the 2007 crash was more localized in real estate, whereas 1929 was more just in credit in how people were using margin. That was the big one. People were using tons of margin because when everything's going up, if you use margin, you can make way more money. And for years, I mean, think about that. Years and years and years, people are making money. They think it's never going to end, and then it gets to here, and they don't know what to do. But they're all leveraged to the gills, so they just keep writing it, and they get these margin calls. They have to sell more of their stock, and eventually they've been wiped out. I mean, people got wiped out. I mean, you've heard stories of people jumping out of windows and stuff because it was that bad. And then think of what happened next. There was one. Let's see. So we had 3 years of a bear market, and then one, two, three, four. We kind of had a bull market here, which looked nice, but then it went back down. So let's see. 1, 2, 3, 4, 5, 6, 7. 8, 9, 10. So you had about 10 straight years of sideways action. So we had a 3-year drop and 10 years of sideways movement. Do you have any idea what that does to the psyche, having that long of a market that doesn't go up? I mean, most of us have not experienced that in our lifetimes. This to us, these drops, they last for days, weeks, months. We don't have year-long bull markets very often. The last one we had would have been the 2000s, right? So that's what this is right here. This big set of green candles was the dot-com pump. So from like 94 all the way up to about 99, it was just up. And then we had a 1, 2, 3 year bull or bear market afterwards as the dot-com crash, right? And then the lead up into the 2008 crash, that was a year afterwards that we had downward movement. So I mean, things can last a while, and since the 2008 financial crisis, look at what the drops have been. You get 1 quarter, right? I mean, this in 2015 there was kind of some sideways action and then a drop for a quarter, but it's just not that long. I mean, look at this drop compared to everything else. The pandemic drop was huge. That was quick. That was huge. It's never moved that quickly and that much in the entire history of the market. But now look at where we are. We've been in double that amount of time and about the same amount down. Let's see. So what do you got there? Maybe the cycles have been shortened. Who knows? Maybe. And that the reason that it looks like this mostly is because of the quantitative easing that we started doing in 2008. In the 80s, like right around 1980, like where is 1980? Let's get all the way back here. Somewhere around the 60s or 78. There's 1980 right over here. Okay, so right around 1980, debt was extremely high. And that was when interest rates were kind of at their peak, and they've been coming down ever since. They had little bounces, but mostly because those interest rates have been coming down for so long, it allowed us to pump. And the other thing, this big pump right here was mostly because trading got into the hands of people at home on personal computers. So this was accentuated by the fact that new traders were in the market and a new type of market had emerged. Like the kind of stuff that was happening in the 80s in big firms was now available to everybody. So the whole world could do the same thing. And now we're in the algo bot age, right? So, but at the same time, we have way more money. So after the dot-com crash, they did the same thing they always do. They dumped interest rates. They printed a little bit of money. It wasn't that big in the 90s, right? It seemed like it was at the time, but it wasn't that big, and that eventually was able to bounce everything after we got, the craziness of the early 2000s out of the way. But once we got here, we printed more money than we've ever printed in our history. I mean, rates got to basically zero for the first time in either ever or in a very long time, and there was a lot more money than had ever existed, which is why this bull market kept going. There was so much cash floating around in the system that you had to or that it had to go somewhere. Like money, that's the thing about inflation. Like people don't realize inflation isn't just something that sits in like specific prices. Inflation moves around. Like if you've ever looked at the world, like a map of the world, and you see, like storms and how they work, it's kind of the same way. Like when some pressure comes into the system, in this case inflation, things move around and they kind of accumulate at the spots that are warmer or colder or whatever, and they move. And that's what money does. Money comes into the system in one way, and then it goes into all these other places over time. So there's just a bunch of pressure pushing things up. And the fact that we've printed so much and we have so much inflation means in the long term we're going to have even more upward pressure. But for now we're having the correction, and that's exactly what the Fed wants to do. The Fed wants to crush this down because this is not healthy. As much as this is nice and it looks good in our portfolios, this is not sustainable, and this can cause problems over time. So the Fed wants to make this look a little more like this. They want to bring these green candles down a little bit so that as we expand, people aren't getting destroyed. I mean, because that's what these candles mean. These candles mean that like some serious players are getting hammered right now. People that made a ridiculous amount of money that didn't take profits are not happy. And that's what kind of has to happen with these things. There has to be some pain. In fact, there's a quote in here somewhere that says one of the Fed presidents says there's going to be some pain. I think Jerome Powell said it as well. Let's see what we got over here. Let's see. Who knows? A little bird thing. Honestly, I feel like the last best time to make good money was the last 2 years. To make money is with too little effort. Yeah, definitely. Everything is going downhill, and it will be harder for lower and middle class to make money in the markets. Yeah, see, that's the thing. It is unless we can have a good enough pullback, then it is like these times where things are just going up, 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 up. It's really hard to get in because the lower and middle class can't buy at those prices. I mean, even when it's down, it's harder for a lot of people to buy. That's what Robinhood has kind of showed us. Like Robinhood and brokers like it have allowed people that wouldn't normally be in the markets to be in the markets, and what you can see is that kind of thing happens. So there are opportunities here, though. So yeah, the last 2 years were an opportunity. It's not like it's over though. There are market cycles. These kind of things happen. So there's going to be more opportunities. In fact, that's what this set of red candles is. In fact, that's what I'm trying to impart on you right here is we're in an area of opportunity. And it may not be done. It might continue to go down, which is kind of what I think is actually going to happen. I think it's going to continue to go down, which the lower it goes, the better, because there's still a bunch of upward pressure in the bubble, right? Yes, we're in a bubble. There's the argument like, are we in a bubble? Of course we're in a bubble. You don't have movement like this when you're not in a bubble, and those things do pop, and that's kind of what's happening right now. But when it pops, people think that it's gonna completely deflate and everything's over. No, that's natural. All right, the way these monetary systems work is expansion and contraction to make things healthy because people make stupid moves. People do dumb things with money, and those people need to be washed out of the markets and out of the business sector, which was one thing I didn't like about the Fed buying junk bonds during the pandemic crash. It propped up the market and did exactly what it was supposed to do, but it allowed companies that were irresponsible to continue being irresponsible. So that unhealthy stuff is still floating around in the market. And that's what I like about these drops is it allows those things to flush out. So if you've been playing your portfolio correctly, yeah, you're down and it sucks, but you're not out of the game and it's fine. Like I don't stress over the market continuing to go down. There are so many people that I've seen that are saying like I'm done with the markets. This whole thing's a scam. Everything's rigged and like yeah, of course there's insider trading and scams and stuff like that and who knows what's rigged and what's not, but you can still make money out of it. It's not like it's rigged against everybody's ability to make money. As long as everybody can make money in the chain, I'm happy. Like, sure, rig it if I can make some money too. If we can all benefit, that's fine with me. I don't care. I'm just going to do what I'm going to do. You do what you're going to do. Let's see what we got over. Yep, down, holding big bags for sure. Yeah, there are some people that are down, and I love that, man. We need those people. That's what we need. Like, we need people to say the market's a scam, take their money out, and leave. Because those are the people that are going to come back in the next few years whenever the next bull market starts and push things up again. That's what 2021 was. It was people coming in after everyone had already made their moves and gotten into position and then pushed everything up. So that's what we want. We want those people to leave. We want that air to flow back in. It's like an air conditioner, right? The air conditioner sucks air in, it compresses it, and then it spits it out. And that's kind of what happens with the market. Like people get sucked in, they're doing well, and then things get chopped up and they get pushed out in the atmosphere again. And it's only a matter of time until they want to come back in because the kind of people that are in and out of the markets like that are more impulsive. They're the ones that just want to make the money. They want to make a quick buck. They don't want to have to sit there and study anything, which I understand. That's a lot of work to do when you're looking at the markets and you've got a lot going on in life. I know I do. I've got a kid now, which is a whole different thing to get used to, and that takes a lot of my time. But I'm still trying to put in as much work as I can because I don't want to miss an opportunity. And that's kind of what this pod or this stream is all about. I'm looking for opportunities. So that was the point I wanted to make about bear markets. So yeah, we could be in a bear market for a while. I don't think it's going to last years. I seriously doubt it. But I do think it's going to last at least the next couple of months at the very minimum. My thought is that we're looking at possibly later in the year or early next year for a bull market rise. And of course, this is just my opinion. Nobody knows for sure, so I'm not saying this is definitely going to happen. But my gut is telling me that we're not quite out of the woods yet. We have some uncertainty to get through, but all these things are fixable. So I'm not listening to the doomsday sayers that closely. Like I always want to listen to the bulls and the bears. I want both people to tell me what they think because I want to be able to update my information as much as possible. And the best way you can do that is to get the people that disagree with you to also tell you what they think. And me, I guess I'm a long-term bull, short-term bear, and I think there are a lot of people that are in that same camp. But there are people that are so sure that this is the end. Every crash that I've been through, there have been people saying this is the end, the dollar's done, like you need gold, and mostly those people are selling gold, so they're trying to push that fear narrative to sell more gold. But it's all ever since 2008, there's just been these doomsday sayers that say it's going to end. Like it's always ended here, right? This was a famous one right here, 2016. When everything was looking bad, there were a lot of people that dumped out of the market right here. And look at the bull run that came after that. That's huge compared to what had happened before. Like people, what they'll do is they'll see these crashes, they'll write it all the way back up to where the tip of the crash was, and then they'll get out, thinking like, oh, I made my money back, time to go. Like, no, what you should have been doing was preparing to continue going from there because of all the inflation that was going to push things up. Hey, Future Space G, there's the man, the myth, the legend, right there. How's it going, man? This has been a rough week with those ups. Hey, I joined you on that short side and didn't do so well so far, so I'm feeling your pain. You still in that? You still in that short? Yeah, we got some shorts going on here, man. It's mostly what people are thinking. It's very short. There's been a couple of people that came in and said they were bullish, and that could be, I think, bullish in a week's worth of time. You could be bullish for like a week, 2 weeks, that because that's what we're getting right now. We're only getting 1 to 2 week pumps before things start crashing again. Let's go back to the daily here to see things a little bit easier. Yeah, I mean, look at that. See, we're getting these little clusters like this, very distinct levels, right? Like back here. This is a distinct range, and you can see it carries in over to this spot. And what's right below that range? Oh, this range that we're in now. So these, yeah, you could be bullish. Like, look, we're kind of in an uptrend from where we were not that long ago. But if you also look this downtrend, this could be another lower high, which is kind of what I think it is. It might keep going, like the higher it goes, the more pressure it's going to see, like especially in this 4,300, 4,400 mark, which you were saying earlier, yeah, would be the stop, one of the areas. But yeah, that's kind of where I would think it would top out at. I'm guessing it's going to be lower high each time, although we could have a run back up here. But that Fed meeting for sure is going. There are going to be some people afraid of that meeting, and there's going to be some selling before that goes on. So let's see what we got. Yeah, so you're still in that short. Oh, sorry, man. See, the last time we were there was the sentiment in the market where people felt it would be bearish for a few months. Does it usually play out? Hold on, let me read that again. The last time we're there was sentiment in the market where people felt it would be bearish for a few months. Okay. Yeah, I think actually, market sentiment was one of the things that I had written down. The market sentiment still isn't that low. It's actually kind of surprising that as far down as we've come, market sentiment is still relatively up. I think. Oh man, where did I put these? These notes are absolutely terrible. I have so much stuff on here. I can't actually find all the stuff that I wrote down. But I think somewhere on here it says that I was a little bit surprised by that. Well, I'm going to have to let that one go because I can't find it, and we're moving on. But yeah, a lot of times you need sentiment to be really bad for things to flip around. Not always. When you hear these kind of rules, these are things that like most of the time it plays out this way, but not always. So yeah, I think the last time we had a real bear market, like sentiment. Here's the thing: down here at the bottom of the pandemic, sentiment was so far down. Like I remember an article came out on this day, on the 23rd of March in 2020, saying that this was just the beginning. It's time for the real fall. And that was literally the bottom that article came out. And I mean, those people were getting roasted online because they put the most bearish article you could possibly get out on this day. And yes, when you've been falling like this for a straight month and it's the fastest decline that's ever happened in the stock market, it's easy to feel like that. People normally feel like that. I remember this day, and I remember buying stuff on this day and wanting to buy more, but I was tied up in something else at the time, so I couldn't buy as much as I wanted, which is terrible. I should have just gotten out of that trade early and used the money to buy during this last little leg of the dip. So yeah, I mean, sentiment was terrible. So right now, sentiment is still not low enough for me to think that it's time for a reversal in that. Let's see what else we got here. Neutral this week. Yeah, kind of getting more convinced that we're going to test that 3,800 again, and this is going to be a fake breakup. I agree with you on that 100%. Waiting for the right moment, and I'm getting convinced that we're not going to break 4,300. unlikely. I think 4,300 is where, because if you look at how like each peak goes down by a good like 1 or 2 thousand points, that 4,300 is kind of where that next peak should be if you were thinking of it like that. So that's not a bad spot for a peak. Even where it is might be a peak. But I mean, I could see it coming up to that 43 and piercing the 50-day. And bouncing down off of that or maybe a little bit above it. Let's see what else we got here. A few more months. I mean, I meant more scam pumps and dumps to come. Sold, bought Etsy, Lululemon in March of 2020. Or should have bought Etsy and Lululemon in March. Well, yeah, there's so much stuff you should have bought. Man, a couple of weeks ago, I was going to buy puts on Target right before their earnings. I was looking at these puts, and they were YOLOs too. They were just weeklies, stuff that I normally wouldn't get, and it was gonna be like $20. And I thought, I don't want to. I'm not gonna just get this stupid $20 thing. I don't even want to do that. I was distracted. I thought, maybe I could, but because I was distracted and doing all this other stuff and not feeling good at the time, I just didn't do it. Which normally it would be something. No, I wouldn't buy those dailies or those weeklies, but I would buy something on that stock because it had everything I wanted in a trade. But because I was distracted, I didn't do it, and I missed out on an amazing gain. I mean, even if I had purchased one contract for $20, I would have been up like a couple $1,000s. So think about buying a few of those contracts or a good chunk of those contracts, or buying leaps that were out a little farther and were a little bit more responsible. Any of those would have been really profitable. But the shoulda thing is so difficult to get by. And let's see. Actually, let's take a look at Lululemon and Etsy. So Etsy, yeah, there's. Oh, wait, you said you should have bought them when? You should have bought them at the end of March. No, you're good. It's Etsy's lower now. You're totally fine. Good thing you didn't buy them at the end of March. Let's check at Lulu. Um, yeah, Lulu's the same way. You're good. You could still. In fact, March is right here. This is in the zone where March was. So if you like those stocks, you're actually still within a good area to get them. I do think they're gonna, but I would seriously recommend waiting for. I mean, like honestly, you have to do what you think. All right, like everybody needs to know that you need to pick your own stocks. I'm not gonna pick anything for you. I'm not gonna recommend that you buy anything specifically. But if you want to buy something, I will give you my opinion on what I would do, and you can do what you will with that information. So if I liked this stock, I would probably have started buying in during this nice drop that was going on right here. I would probably pause my buying a little bit during this bounce just to see what happens, because it could keep going up and you'll think, oh man, I should have bought more. But because of the way the market's going and the weight that we have coming up in the next few weeks and months, I would honestly say it might not be a bad idea to hold off on any of those stocks that you like, because you might get a better price coming up. In fact, one of the things that I saw is there were a few people this week talking about how they felt about the market. There's the big news: Elon Musk is cutting workers because he has a quote bad feeling about the economy. And then there was let's see, a crypto hedge fund manager. What was the guy's name? I've heard it before, but let's see. It was Steve McCluger. Is that what it is? Steve McClurg? Yeah, Steve McClurg of Valkyrie Investments. He's got risk. He's got the market dropping another. Well, I should say risk assets dropping another 30%, because they're gonna hit the rates a little bit harder. But he's looking at more downside for the crypto market and the stock market. He's got price targets, I think, in the low 20s, like 22K for Bitcoin, like 14K for Ethereum. If it's happening there, it's going to be happening in the markets too. So I would imagine that with all this pressure, pretty much everything's going to go down. So you're not late to the party by any stretch of the imagination, most likely. All right, like it could bounce and everything can go up. Of course, there's always that possibility. But from what it looks like, you're probably going to have some time. If you like those stocks, I mean, think about them. Lululemon and Etsy are not bad companies actually. So in the long term, they wouldn't be a bad hold, especially Etsy. I like Etsy a little more than Lululemon, just based on the business model, because so much more stuff is going to like directly from consumer type stuff. People are making things and selling them on Etsy, and these kind of businesses are growing. More people want to work from home. There's articles like every week about people trying to fight coming back, going into the office, because like people hate those jobs. and they suck. They're not easy jobs, and they're soul crushing sometimes. So like there's incentive for people to try to do things like sell products on Etsy. I mean that's not the only thing, but like they're still relatively new, and while they were way overhyped over the past few years, I mean they went way up because of the pandemic in general. They've come down. And what I have here is a standard deviation channel, which basically shows you based on how it's been trading, where the middle price should be. And this is an estimate, of course, but they're really close to that middle price. A lot of stocks are, they bounce like one or two deviations up and came back down. So as this drops, it's looking like something that would be nice to add to. But of course, for me, this is an expensive stock. I don't like owning, I don't have like I have Tesla and Amazon. Yeah, those are my expensive ones. But like I don't touch, I don't really have the cash to be buying more stuff like this. So everything else I get has to be below 100. So I probably wouldn't get it. Like Lulu, what was Etsy? Etsy was 80. Yeah, see, Etsy's not as bad. Like, and Etsy's come down a lot more than Lulu. See, Lululemon, it's I think it's been around longer, but they have a whole system set up. And they're selling products that people want, especially during the pandemic. Everyone was buying their yoga pants and stuff like that. So I mean, they have a little bit more going on for them right now. But I think as time goes on, Etsy looks a lot better. And look at where it went. Like Etsy actually came down to some previous levels, and it's below that medium price. And actually, it's entering into an area down here where there's a lot more volume, a lot more support. So I actually like Etsy. If you were going to look into Etsy, which I'm not buying Etsy, but if you liked it, like it's looking a lot better now. Not a bad place to start going. So let me catch up with this. Sorry, I've been missing all your comments over here. Actually getting like a good amount of them today. So let's see. I'm way back over here. So when Gates starts shorting the market and Musk stops sucking employees in the best company for future, it's good midterm market. Yeah, I mean that's right. That's one of the things. It's like people like Bill Gates and Elon Musk. Like you can kind of tell by their moves how what the health of the economy is because they're just going with everything. Let's see, billionaire scammers. No March 2020 when everything dumped. I won't go in on them now. I'm crypto focused. Yeah, crypto. See, crypto is down so much that I'm starting to like it again too. I was in crypto when it was much lower. I mean, I was getting in like the 3 and 4 thousands. So for me, I dumped most of it by the time it hit the early, the low 20s, and my range was much lower, and now it's up in an area that's foreign to me. But since it's come down and people are hating on it now, like I've been adding to my crypto positions little by little. Like basically every couple of weeks, I'm just throwing a little money in things here and there, and all my trades, I'm trying because I do swing trades, like longer term trades. I don't really do the day trading stuff. Sometimes things work out overnight or whatever, but I don't go for that. So basically anything I've had, anything long term I have, I'm kind of taking off to add more cash so I can get these opportunities because that's what I want. Like I want to be buying in these dips. If we get another like pandemic style drop to a bottom, I want to be ready for that. So as no matter what happens, I'm going to be keeping a good chunk of cash. So yeah, there's definitely that crypto is definitely something to look into now. My advice though is make sure you look into to projects that have utility. Don't just buy something because it's going up. Like make sure you've researched it and you can see that what they're doing makes sense. Like one of the interview that I did with Sloan Fishby, shout out to you. I know you're in the stream right now. We were talking about Splinterland specifically because they have a game that people actually like to play, and they're doing work. They're developing the game. They're doing town hall AMAs. Like I think every week or every month, whatever it was. And they have a currency that's legitimate that would work without the game, and they have a game that people like that would work without the currency. So stuff like that actually has utility and people are using would be stuff to look into in the crypto space. So I do like looking at that stuff now, and as time goes on, I want to buy more and more. All right, so what else? Lulu is at resistance level. I wouldn't buy it yet until it breaks. Yeah, it's a little bit resisty. Lulu's not my thing right now. It's kind of in an area I don't want to trade it, but it looks better than it did. So if you wanted to start going in, it's good to start thinking about doing that. So let's see, Shopify. Oh, there's another good one. Shopify has a split coming up. Let's see. Oop, let's go. Shopify. True, I never went to work in an office ever again. Yeah, I feel it, man. It's rough. Let's see. Have you ever seen small cap companies behind sold? Let's see. Have you ever seen small cap companies being sold off to bigger companies during a bear market? Yes, absolutely. these are the times that companies get bought out more, actually, because things are when companies fail, what they do is they look for a buyer. They look for somebody that will buy up enough, buy them at a price good enough to get the board of directors out okay. And then the shareholders will usually be happy about it because it'll be attached to a better company, so the shares will usually go up. So that's the kind of thing you actually do want to look for right now is buyouts. Let's see. I don't want to mention the company I'm in, but it's a small cap. Rumors are going around that they're getting set up to get sold. I need the capital to trade again. Yeah, I mean, rumors are going around. See, that's a tough one. Have you ever heard the adage "buy the rumor, sell the news"? So like when things haven't actually hit, but there's kind of an inkling that they might. I mean, that's normally when you'd be getting in, and it sounds like you're already in this right now, whatever company it is. Whether or not, if it's something you want me to take a look at, I can. But if you don't want to say anything, that's totally fine too. I totally understand. Um, but when you hear stuff like that, it may, you never know, right? When it's rumors, because sometimes nothing happens, but sometimes the stock will move just on the rumors too. So if it's something you're looking to trade, um, I don't know. There's two ways you can go about it. You can either just hold on and hope that there actually is a deal, because if there is a deal, whatever the price is for that deal, the stock will move up to that price to match it. So if you've heard a specific price target that's above where you bought in, then it might be worth holding if you want to risk that money for something like that. Like buyouts are really, really hard to time because, I mean, they're so secretive, and usually if there's rumors going around, it's because these companies want rumors going around, and who knows why they might do that. See, I don't want to say because it's supposedly an insider. Oh, I get you, supposedly. Well, you never know. So it's probably better not to say anything, right? Let's keep everything legal on here. That's what I say. Like, do everything right on your end. You know what I mean? Like, people are going to do what people are going to do. There's corruption in the market, but as long as you take care of your side, then you're good. So what you say over here, Future Space G? Is these small cap companies are practically free now. My company uses small caps now, but they're so cheap. Um, yeah, I mean, small cap companies are targets all the time to get bought up by bigger companies. And if you have some, you know what I'm saying? Like, if you have some information and you could trade it, go for it. Like, I wish I had insider information on something. I would trade that so bad. I would do it legally, or at least I'd try to do it legally if I could. It depends upon what the information is and where you are in the company. Like, if you're not high up in the company and you just overheard something, then you probably aren't going to get busted for insider trading. You could just say like, oh, I like the way my company was performing, so I added my shares. Like, I believe in what I do. So it's not like something you get caught very easy. But if you run the company or you're one of the top people and you've been discussing mergers, that's when you can get in trouble for insider trading. So it's all about like where you are in that chain and like what you've heard. Because there are people that make decisions all the time. There's nothing wrong with buying more shares in the company if you believe in it. I mean, because it doesn't have that's what you can say to people. You can say like, listen, I bought this because I believe in this company. Just because something happens doesn't mean like I knew anything or I was trading based on that. But just cover yourself. Always gotta cover your butt, man. Always gotta cover the butt. Okay, so let's finish up this crypto news here. So one of the things I wanted to talk about was New York. They are working on a bill right now. I think it's already been passed, but it needs to be signed to limit large mining operations that are running proof of work. All right, so proof of work is basically machine power. How much hash power can you generate to uh, God, what's the word? I'm spacing on the word right now. But how much power could you generate to solve the problem and validate the transaction? People who have more money can buy more computers, more space, can run the little guys out of town basically and have an unfair advantage. Not to mention it uses a lot of energy, which is not good for the environment. So New York is actually they've made some kind of legislation that it's only banning large proof of work companies from using carbon-based energy. So it's not banning proof of work in general. It's just banning the use of carbon-based energies with those large firms to hopefully cut down on the energy. And of course, there were some people that were against that, because it affects them, so they were lobbying for it. But that actually does matter to the crypto space, because if that kind of thing continues to happen throughout the United States, that would be a little bearish, because certain firms are going to have to change they're going to have to pay more for energy, which means their mining cryptocurrency is going to be less profitable for them, which means they may or may not continue. See, that's one thing that's kind of good about proof of work. It actually gives you somewhat of a floor to tell you what the value should be of something. So if it costs too much, then companies will stop mining, which will slow down demand. Basically, people won't. They don't want to mine it. It's too expensive. The fewer people will mine it. The price comes down. So that's yet another thing that could be bearish. Let's see what else we got here. Let's see, information from management and main investors, but they don't have a dead set date. Proof of scam. Yeah, well, yeah, you know what? Yeah, I don't know. You got to be careful then. Just got to do what you got to do. So good luck on that one. I congratulate you if you do have some great inside information you can trade off of. We should all be so lucky, but be careful about it. don't do anything illegal. All right, let's see. So what else? Next story. So we talked about the ripple effect. Oh, so Solana had its second outage in a month. Let's see. There was that. I think that kind of has turned some people off, like having a couple of outages. I think this one they were down for like 4 hours. So people aren't too happy with that coin right now. So it's one I've been kind of like, I have a little bit of it, and I've been deciding whether or not I want to add a little more, but I don't know, man. I need to research the project a little more. I basically only have it because it's recently become available for me to buy. So that's one that I need to look. I need to do a little more research on. But I did see that it had an outage, and people are thinking about that. That's something to take into consideration. Like, what's the quality of the team and the equipment that this stuff is running on? If you got a lot of problems, if it's and you can't use the cryptocurrency, then that's that doesn't really work. So let's see. We also had, let's see, OpenSea Insider Trading. Was it Nathaniel Chastain? He used to pick the featured NFTs that would show up on the page. So he'd buy them. He'd buy an NFT he wanted, pick that one as the featured NFT, and then flip it when everything would go up. He's getting busted huge, like two different counts that are up to 20 years a pop. So he could be in jail for 40 years for running this scam. So you got to be careful with speaking of insider trading and stuff like that. So there you go. Watch out for OpenSea. Yeah, make your money now before the bots take over. You know what? I don't mind the bots actually. The bots are what help these big moves exacerbate. Like, bots to me are actually kind of a blessing, because if they all get the same idea, they can just explode the price or drop the price at something, which will usually be corrected. Because if anything moves really quickly, with the exception of something that has news to justify it, but if the news doesn't justify that big of a move, bots exacerbate it. So and yeah, maybe one day bots will be way better, and they're going to outcompete humans completely. And in fact, some people think they already do. But if that's the case, then like, why am I still trading? As long as I've been, what is this, like 4.5, almost 5 years now? Like, I should have been out of it if it was impossible to make money on your own. And while I'm not a millionaire or anything, I'm still here. So and I have a strategy that works well enough for me. So the bots, good. Let them do their thing. My philosophy, like I said before, is everybody, let's all make money together. I'm not greedy. I don't need the whole pie. I just might need my little piece. That's all I want, is my little piece of the pie. The bots and the big firms, they can have the rest. Have fun with it. So we talked about Solana, we talked about OpenSea, and then the last thing, I already kind of mentioned this, but I'll go over it again. Steve McClurg of Valkyrie Investments, he has the Fed dropping risk assets another 30%. Much more downside. He's got a price target on ETH of 1,400 and a Bitcoin target of 22K. He also thinks it's a good buy now. And he also likes stable coins as things go on, but he does think that it might drop a little more. And I kind of agree with him. In fact, let's pull up Bitcoin real quick. Let me pull up the Bitcoin futures. So let's see, the Bitcoin futures. We're kind of resting in that, right around 30K mark, which we have been for a little while, and it's been, this is kind of what I've been expecting. But if you look what's right below us, the volume profile here, there's a lot of thin volume below us. Like, we basically have, because we're at 29, and we didn't spend a lot of time in the mid 20s. Like, basically, once it broke its old high of 21K, which was right back here in what is that, the end of December, beginning of January. Like, once it broke it around that that area, it flew because people had been waiting years for it to get back to that point. And since then, like the mania really took over. But because it moved so quickly, not very many shares changed hands here. So people have their averages down here in the like low 20s, which is why I think the reason McClurg picked that 22K mark was because there is some congestion right here with a little bit of volume. So this area could just fall really easily. And in fact, if you look at the volume down here, it looks like there's a lot more than there actually is. I like the volume profile because this volume was coming in at previous prices. Like you see the entire volume candle candle for the price candle that it's associated with, but that price candle moved a huge range and you don't know where in that range the volume was. The volume profile tells you. So like we're literally sitting on the very bottom of decent support until we have a nice trap door below us down to this 20K mark. So people are saying 22. My mark is 20. And the reason I say 20 was because that was the price that it had to get to for years. I mean, when the Bitcoin futures premiered was right when the drop started, and that was back at the end of 2017. It was just down, down, down until the end of 2018 when it finally started to recover. And then it spent a good year and a half sitting in that 12 to 8K range before this explosion happened. So this 20K was a big mark. Me and quite a few other people thought this was the top. This was where we were going to dump most of our shares because we expected it to dump again. Well, it was during a mania this time, so it didn't dump and it pumped. But now we're coming back to that area where it's very uncertain. So we'll have to see how that goes. So what do we got over here? The GPU indicator. If GPUs continue to drop, maybe the rest of the market will. Not financial advice, of course. Yeah, you definitely have to take it. It's good to take indicators with a grain of salt. I used to have indicators all over my screen. Like I would have tons of moving averages. I had the MACD, I had the RSI, all that stuff. But it just doesn't really do anything. It doesn't help. I wasn't able to make any trades or make any money because of that stuff. What works with me, it would just be price levels, volume, standard deviation channels, and moving averages. Like those are the things to look at in the more long-term time frames to make some decent trades. Because if you're an investor, then I want to buy when it's down below the median of the standard deviation channel. Like right now, that's what I like about Bitcoin. Bitcoin is one standard deviation down from where it should be based on historic trading. So at this point, even though I think it's going to go lower, I like it as a start. A good way to start buying. And that's kind of what I've been doing. I think I've put in the past month, I've added to my crypto position twice. And if it drops lower, I mean, if it does hit this 20 mark down here where volume starts to come back in, that's where I want to start going in a little heavier. Because, I mean, it could fall below that 20 down to the 10s, right? Like, that's where the real support is. Like, if there's a huge catastrophe, if something really bad happens in the crypto space, it's got support down there around 10K. Like this is where most people were getting into it before this whole mania took off. Like look at the difference in volume here versus right here. I mean, this is like quadruple the amount of volume that's up here. So that's why the movement up here has been so drastic. There aren't a whole lot of players on the field. So the way I've been describing volume volume is like any sport. Like let's take football, right? So if you got two teams and you only have a couple of players on the field, if one of those players gets by the defender, there's open field and an easy run down to the end zone. But if there are a ton of players, like let's say there's more than there should be, it's like 30 players on each side, it's going to be really, really hard to break away. I mean, you're going to get by one person, there's going to be 5 more right there. So that's why volume matters and why price can move so much when there are not very many players on the field. Because if somebody wants to get into something and there's only one seller or a small number of sellers that aren't willing to let it go cheap, then people that are feeling the FOMO are going to pump money out, which is going to pump the price up, which of course will cause people to just sit on it even more thinking like, hey, this keeps going up. Why would I sell it? So thin volume can move prices quite a bit. And even though this isn't all thin volume, it's thinner than it used to be. I mean, most people were in before 10K. I mean, Bitcoin, there's a lot of holders from years and years ago. Like I think I got into Bitcoin at the end of 2018. Like when it was still falling. So I was in that mess too. And I remember when it was around 6K, that was kind of the mark people were saying that it was profitable at for miners. Proof of work style Bitcoin is profitable right around the 6K mark. But once you start dropping below that, it's not that profitable for miners, according to that DNA to continue according to that theory, to keep mining. So it's still well above profitable. Even if it drops quite a bit, miners are still going to stay in the game. So I'm a little skeptical of how far it's going to drop. Like I do see that 20-ish K mark as kind of likely, but I don't necessarily see it as like definitely. It really all depends upon the market. So, and the Fed. I mean, you can talk about whatever you want in the crypto space. I mean, I watch crypto YouTube channels all the time, and they're always talking about so many different things. And the ones I like are the ones that are talking about the real use case of crypto, the good things that are happening with the projects and all that. But none of that actually matters. And crypto is mostly tied to Bitcoin because Bitcoin's kind of the OG, and everybody knows it. And the big hedge funds are in it, right? Like these big billionaires that are pumping crypto are almost always in Bitcoin. Sometimes they have alts, but they're pumping the not only Bitcoin itself, but the Bitcoin mantra of like extreme freedom, and then this is going to change the world. And it might. Cryptocurrency might. I don't necessarily know if Bitcoin is going to be the one that does it by itself, but as at this point, it is the thing that everyone trades on. So the reason crypto is so tied to the market now is because all these companies and these billionaires that own stock and own companies have bought into it. So as their company moves and as their net worth moves, crypto will as well. So it's tied to the market. You think about Michael Saylor, right? He owns MicroStrategy, or he's a CEO or whatever. He's a huge Bitcoin proponent. He's got a ton of it. And what he can say can move markets. So these people are very much invested, and they're trying to move everything based on that. So even if a crypto project is doing well, if these hedge fund managers decide that they don't like crypto at the time, everything's going to dump. So you got to watch Bitcoin, even if you hate it, even if you like, your altcoins are the best, and I have all these specific ones. Fine, I respect that completely. I think altcoins and Bitcoin all have a place together right now. In fact, I own both. Right, I try to be as diversified as I can. But you got to realize that even if you don't like Bitcoin, it is the thing that moves the crypto market. You need to pay attention to Bitcoin. So right now, it's looking good. So I think that's pretty much it in the. There was one more, Gemini, right? They're going to be laying off. So Gemini is a stable coin, but it's run by the Winklevoss twins of all people. They're going to be laying off workers because they're also seeing a slowdown in the economy, and of course the crypto space is tough right now. So that's another reason they're probably laying them off. So things are really looking good for the buyers. I'm loving this. Okay, so let's get over to some stocks now. So I've got a little bit more time to go. Um, but this week we had a few earnings reports. Man, I did the same. I did my famous thing, man. I had a nice win, 2 weeks ago, and then this last week I missed CHWY. Okay, CHWY. Let me go to the other screen right here. CHWY was. I was looking at CHWY right before earnings. I was looking at some calls right about in this area right here too, but I ended up not going for it. I was like, you know what? I'm gonna get the condor on GameStop instead because I feel like GameStop's not going to move that much. And if the market hadn't pumped the next day, I would have been right. Right? GameStop was just going to sit where it was. So GME, right? Here was the earnings, right? Boom. This is exactly what it did. Let me zoom in a little bit so you can get a clearer picture of what happened. So I bought the Condor here, and I was expecting like, all right, I have something in the 30s, something in the teens. This thing isn't going to go beyond that. And look, it didn't. Right? And it stayed perfectly flat, basically, because we already knew what was going on with GameStop. They were going to lose. They're always losing. They're not coming back, but they had all these loans, so they're good for a little while longer. There's still some core business. They're still making, billions in revenue, but that's been dropping, and it continues to drop over the years. And I don't really see how they're going to get that back with the convenience of downloading games, basically. Physical media just isn't in the same favor that it used to be. But what happened the next day? The market pumped. The market had a nice up day. So what did GameStop do? It pumped up, and of course, because the day after that was Friday, it stayed where it was. Even though let's see, what did the market end up doing on Friday? I think the market. It wasn't happy. So we had the nice pump on Thursday and the drop to kind of like back to where we were on support on Friday. And look at this. The whole week was basically flat. And this is what I've been saying. Like every week I do the stream, I'm saying like things are going to move up and down a little bit, but mostly you're going to see a lot of this. You're going to see these days, like these big drops, these big pumps, and they're just going to kind of float around a price target for a while, and then it'll change and do it in a different level. Because look at what happened the previous week, right? The Thursday and Friday were pumps, but before that, it was just floating in this same zone for a while. I mean, this is exactly what the market does. It picks a zone, it floats, and then it changes to a new zone, floats, changes to a new zone, floats. And so that's where we are now. We're in this zone. So are we going to go back down to this zone, or are we going to make a little higher zone for this next coming week? I don't know. If we end up going up, I'm gonna get on some shorts because calls will be in higher. The premium on calls will be higher, so shorts will look a lot better when I sell those calls. So I'm kind of hoping for that because I just think it's going to go. I mean, it may not, but I think it's going to go, and I want to get a good short on something. So a little bit of a pump would be good. In fact, I would hit GameStop. But the problem with GameStop is it's got so few shares and such high short interest that like there's always the chance for a squeeze. So really, what I'm going for is like a quick move on GameStop. So okay, CHWY was the one I was actually looking at. They ended up doing way better than expected. Let's see, they had a surprise profit. Their earnings per share came in at 4 cents, but they were supposed to lose an estimated 13 cents. The revenue came in at 2.43 billion, and the estimates were 2.41. So they were a little bit better than expected, and they pumped. And I didn't buy calls on them. I should have done that. I was looking at, it was a good time to buy a naked call on a company right exactly where I thought it was going to be too. So that was unfortunate. I've done that a few times this earnings season. I've had ideas and haven't followed through with them. Which when you have a certain way of trading, you look for certain setups, go with your gut. All right, because that's one thing I've noticed. Like the problem with trading isn't your gut, it's your head. Like sometimes your gut's going to be wrong, obviously, but your head is going to be wrong way more. You think way too much about everything, and you go way into these little rabbit holes about every stock that you believe in or you don't believe in. But the best thing to do is say, okay, I have all these ideas about the stock, but I feel like this. Because there have been times where like my mind says this is bullish, this stock looks like it's going to go up, you should jump in, but my gut has just not felt right about it. And what happened? It didn't go up. Right? My gut was right. So I've realized when you have a setup and you've been trading for a while or investing for a while, if your gut tells you something, give it more weight. Listen to your gut because it really, for whatever reason in trading, it's so good. Like your gut can get you into a lot of trouble in certain things, but like I've spent most of my life trying to reduce the amount of influence my gut has over me. But in trading, I've found that I've tried to increase it because not listening to it has lost me a lot more money than listening to it does. So, I missed out on this one, just like I missed out on Target, unfortunately. I've only been making these little wins through this earnings season, just little bits here and there, but that's okay. I still made more than I lost. I mean, my only loss was like that $20, and my win before that with Wendy's. I mean, I doubled every contract I had doubled on that one, so that wasn't bad at all. So GameStop and CHWY, they had their little earnings thing this week. KIRK. All right, so Kirkland. Now, this is not the Kirkland that's associated with Costco. This is a Kirkland, the furniture maker. They got hammered. They had an EPS of negative 62 cents when they were estimated to be negative 24 cents. The previous year was a profit of 11 cents, so they blew that one. Their sales came in like about $7 million under what they were supposed to be by the estimates. Their same store sales dropped 15, almost 16%. Let's see, the suspended estimated timeline for long-term finance goals. Yeah, so they changed, they lowered their guidance, and they also had some longer-term goals that they basically said, I don't know if we're ever going to, or when we're ever going to meet these. So this stock got hammered. Kirkland is an interesting stock. In fact, let me pull this up real quick. I originally got into it because I thought it was associated with Costco, but since now that I know it's in the furniture space and the home decor, I guess you could say, it has a whole different set of rules to run on. And I've been buying shares. I'm actually in at like, I don't know, what is it? Yeah, 715 is my average right now. I don't have very many shares. I only have a few shares. I'm just kind of messing around with this one. But as this one drops, I'm looking into getting this for longer term because this is a super cheap stock. This is a penny stock at this point. If we go to the long-term chart, it had this explosion in 2020. I was buying it in here for like 60 cents. I remember it had like a 62-cent was share buy at one point, and then I flipped it when it went up to $5. Obviously, I should have waited because it went up to 35. But when this thing gets really, really low, I like it as a buy because it takes time, but it comes back. I like it because it comes back at some point. But right now, home decor is not the industry to be in, especially what they're doing with it. So that was a huge drop. Definitely something to look for on the radar. As it drops even more, I might get into it a bit. I'm not really sure yet at this point. Like I said, I was just kind of messing around, buying a few shares here and there. All right, so now moving on, Rite Aid, one of my favorite short of all time. Right, I was actually just in Rite Aid today. Kind of interesting. Looking for baby formula, which of course they didn't have because nobody has it. But Rite Aid is trash. If you've been into a Rite Aid lately, you can see. I mean, it was sad when I went in there earlier today. They had like I would say a third of their shelves were empty. Other like there are definitely problems with the supply chain, but other stores are still relatively full with their shelves. I mean, there's even if the shelves are a little sparse, there's still pretty much stuff everywhere. But Rite Aid had like huge chunks of nothing. Just like they had taken shelves down because they weren't using them. It just looks, it's dirty in there. It's not very, it just doesn't look good. So Rite Aid is struggling, and you can tell by the chart that they're struggling. But Deutsche Bank, in their infinite wisdom, they upped the price target to $4 from $2. So where are they at right now? They're at about $6. I think they dipped low. Maybe dipped about that low. Yeah, $4. So they had a price target of 2. I don't know why. They they kept it at a sell though. Like so it's kind of interesting. They upped the price target, but they kept it at a sell. So they still don't like Rite Aid, but they think it's not going to be quite as low as they thought before. So if they're, this little pop that I'm getting in Rite Aid, if it keeps going, which I hope it does. See, that's why I'm hoping that there's a bounce next week because this would be a stock that I would prey on for sure. Because a bump in the overall market is going to bring this up, hopefully up to the moving averages here. Maybe get it up to that 6, 7, 8 level. All right, it is at 6. Get that like 7, 8 level. Like if I can get a nice spike, like see these spikes right here. This one happened. A little bit after earnings, I remember, because some company came in and said we're gonna pay we're offering $800 million to buy them, but they were just considering it. They didn't actually do it. So that was something that you have to look for. Like, oh, nothing happened. It was just some people talking about doing something. That's going to be a good short because remember you were talking about bots earlier. Well, that's what this is. Here, let me zoom in a little bit so we can get a better picture of what that looks like. This pump was because of the bots. Like this stuff happens so quickly when news like that comes out. The bots are I mean, there are these huge companies with really smart people making these bots better, but they're still looking for specific parameters. They're still kind of dumb. They don't know how to read nuance a lot of the time. So what they'll see is Rite Aid buyout 800 million. That means the shares would be worth X amount of dollars. Boom, throw in a bid for, up to that amount. And then once it starts moving, other algos see, oh, it's moving, news out, 800 million, buy here. And that causes this huge pump, which eventually people start selling into because if you are an investor in Rite Aid, if you actually believe in Rite Aid as a company, I mean, look at the pain you're in right now. I mean, this is disgusting. This is like the long-term chart right here. They've had so many reverse splits. They were never up here at $172. This is because the chart's been messed up by all the reverse splits they've had. Like here's one right here. I remember is that one from 2019? Let's see, 2022, 21, 2019. Yeah, in 2019 they had a 1 for 20 reverse split. So they went from like, less than a penny. I'm not less than a penny, less than $1 a share to like somewhere in the teens, I think. I don't remember specifically. But ever since then, they had this little pump when everything was when they're a pharmacy, so they actually got a little bit of a pump from the whole pandemic thing and having the vaccines and stuff like that. But since that has died down quite a bit, they're going back into their downtrend because what do they have anymore? I mean, the pandemic kind of saved them for a little while. Number one, they were able to get loans, I would assume, during this. I'd have to go back and look at the finances to see if they actually did. I don't remember, but I just assume they did because most companies did, especially ones that were failing. Plus they had the whole vaccine thing, so that was pumping them up a little bit. Now that that's waned, it's going back to this downtrend of just like look at this. If I zoom in after these pumps, down, 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 down. Right, little pumps and down, down. So people that are getting these pops, that are investors in this, are using it as an opportunity to get out. These pops will not last long in heavy companies like this. When there's so much downward pressure, and you see like one day they move from $7 to $10, that's way too much. And I didn't even notice it until it was like somewhere here, like 9s or 8s. I remember I was checking my position to see what was going on with some other stocks, and suddenly I realized that my Rite Aid call was just through the roof. And I was going, what's going on with this thing? And so, sure enough, oh, look at that. It's way up. So I sold the call, flipped directions, and I rode a short, down into these red candles. I let it go pretty early. I let it go like somewhere in here. I only rode it for a few days, which was actually good because there was this little area of congestion and a pop right there. So I'm glad that I did that. But I mean, I could have, if I really wanted to play it, I could have reshorted. So, but I don't, I like obvious things. But pops like this, I mean, even though it went up and it hit the 21 moving average, it's just like, that's not really enough of a move to make me think this is definite because this could keep going in a healthy way. Like look at this move. I mean, this moved a few bucks right there. So I don't like that. But one day popping like that much, yeah, that's something in a company that like Rite Aid, yeah, that's definitely something I'm going to short. So if this move keeps going for a while, if we get a continuation of the bounce, I might put some shorts on and lean into them as it goes up. Maybe I don't know. It really depends upon what the price action is, and what other stories come out. Because there also might be a reason why Deutsche Bank rose the price target. I actually didn't read too much into it. I need because there's so much going on this week, so I need to get into that a little more. But this is definitely a stock I'm looking on for a short if it pumps a little bit more. I need a little bit more confidence. I need some green, to make me think it's way overdone. So that's one we're looking at there. Let's see. Twitter, the never-ending drama of Twitter. So not a whole lot to report on Twitter this time, even though there's stuff happening every day. Basically, their HSR period expired, which is like a way for a time for the regulators to look at this deal and see if they like it or whatever. I don't really know a whole lot about it. I've actually never heard of that up until this story came out. And then the other thing, Piper Sandler. Okay, so here's an interesting bit of information with Twitter. So analyst upgrades and downgrades are some of the most important things you can get in the market. Like the things that move stocks the most, besides big positive random catalysts like, oh, we made a surprise profit or whatever. But like things you can count on that will move it will be guidance and analyst upgrades and downgrades. Analyst recommendations are so powerful, and Piper Sandler adjusted Twitter's price target to 54.20, which is the price that Elon Musk originally said. So the fact that they're doing this right now and this deal hasn't moved and it's kind of been sitting in limbo for a while now is a little odd to me. So they're confident that this deal is not only going to get done, but get done at the original price. And the whole thing is Elon Musk is either stalling for other reasons or he wants to find out how many bots there are. I'm sure he actually does want to know how many bots there are on Twitter because the way they make money is mostly through advertising. The subscription part of Twitter is it's like 10% or less of their revenue. So the fact that advertising is basically the main source of income, you need to know how many people you're actually advertising to in order to be able to sell it to advertisers. Because people that are buying advertising space want the most bang for their buck. And the way they're going to get that is if they know they're delivering their ads to real people. If it's going to bots, then it's not doing them any good, and they're not going to want to advertise with Twitter. So Elon Musk saying he wants to know these things is completely legit in my mind, regardless of what else is going on with politics and the whole situation. The wanting to know the specifics of the money making part of Twitter to me is extremely important. And if I was in his situation, I would honestly do the exact same thing. I would try to find out how many bots there are, because they're saying Twitter says that it's less than 5%, but some independent researchers have said that it could be anywhere between 9 and 20%, and there are multiple research firms that have looked into this. Estimates are in that range. So I seriously doubt that it's going to be less than 5%, because Twitter has to like put the best show out there. But the problem is if the bots really are, let's say they are up to like 20%, up the high range of the estimates, Twitter could get in trouble with the SEC for lying in their filings, which is a huge deal. So whatever they're doing, if they are lying, they're trying to scrub everything real quick. If they're not lying, then they need to find a way to prove that these people are real, and I don't really know exactly how they're going to be able to do all that. It's kind of a complicated situation, but again, the thing just kind of moves. There's not a whole lot of or it's kind of just kind of sits there. The deal just kind of sits there right now. There's really not a whole lot to report. Just the fact that the interesting thing to me was that the Piper Sandler adjusted the price target to 54.20. I think it's way too early to do that right now and put it at that exact price. I think it's very possible that if this deal goes through, that it could be negotiated less. So we'll have to see. I mean, because 5420 would be a huge win for Twitter itself. Like the shareholders really want that. They'd make a ton of money if that happens. And so would the board. The board would look good in that sense. Elon might feel like he overpays though. Although with him, who knows? He's got a ridiculous amount of money, so maybe he's not as worried about it. Okay, so there's that. I guess the last thing was, oh yeah, before we move on from Twitter, so there was a law, a Texas law that was gonna cause companies to have to report report how their content moderation, like report what their actual content moderation is, and not ban anybody based on any specific ideals. So that got shot down in the courts, and it was only going to be a law in one state, but I'm sure if it passed in one state, other states are going to look into that too. So that's bullish for the social media space in general, because that means that they don't have to spend as much money to tell people what they're doing. Not to mention they can continue to do whatever they're doing and they don't have to be held accountable for it. So there were problems with that law though too. It wasn't just about there were a whole bunch of things all in there. So I didn't really think that it was going to pass, but if it did, that was going to be very important for social media. So I was watching that. So that one got shot down by the courts. So that's just not happening anytime soon. Okay, so the last thing I have here is Tesla. We already kind of talked about that. They're pausing their hiring due to quote super bad feelings about the economy. See, that's the other reason why I don't necessarily think there's going to be all-time highs. There are multiple fund managers, multiple people with money that have a bearish outlook on the next few months. So I mean, this is when I was first trading, I always wanted to just like know how things were going. I didn't know, like I would always have to watch things to get trade ideas, and I just didn't feel confident on doing anything myself, and I didn't understand how people knew, like, oh, the market's doing this now, the market's doing this now. And while you don't ever really know the specifics, you kind of get a trend of how things feel. And we just have so much downward pressure that I'm confident enough in a downward move or a sideways move. And for option selling premium, I'm good with either. Like I'm looking at selling calls on pops, because that will allow me to drain premium out of these contracts, even if it doesn't go down. If it just sits there, or it like comes up and then goes back and drops back down a little bit, that time decay is going to give me money. So I'm looking at that kind of stuff, because I like the way the market is looking in the downward position, like in a downward direction. It just feels like it's going to go that way. My gut is telling me that. My head is telling me that. They're both kind of on the same page with it. Is it going to happen all in one move? No, it's going to be kind of messy. But I like it. I like a downward move. And there are people that don't think so, but that's my go. Okay, so we got some stuff coming up this week that's going to be very important. The CPI on Friday. Okay, it's consumer sentiment. So it hasn't come out yet. All right, so consumer sentiment thing I was looking at was an old consumer sentiment thing. For that question you were asking quite a while ago. It's coming out on Friday along with the CPI, so we'll see what people say. If consumer sentiment is up, that's what I was going to say about it. If consumer sentiment is up, if it's too hot, that's another nail in the coffin for the Fed slamming the rates up even higher. So anything hot, like that's what kind of sucks. Anything that's good about the economy is going to be bad for the Fed's decision to move on interest rates. It means that they're going to have to hit things harder, which means people are going to feel that impact more directly. The talk around the Fed right now is like, can we have a quote soft landing? That's everything you hear. If you turn on financial media all day, you're just going to hear people say, can we have a soft landing? Can we have a soft landing? And that soft landing basically means, can we get prices down without losing too many jobs, without crashing the market completely, without having all these problems that come from slamming rates up too hard? But if we don't act quickly enough, then we're not going to actually solve the problem, and we're going to have to hit it harder later, which will cause a problem for sure. So they're kind of in this really touchy point where they haven't been. There's a lot of pressure on the Fed right now. I mean, I wouldn't want to be a Fed president having to deal with this stuff all the time, and all the questions and the decisions and whether or not we should go harder or not. But the fact that we've got the consumer sentiment and the CPI coming on Friday, that'll tell us a lot. Because the week after that, let me open up my calendar here so you can kind of see the dates. So yeah, the CPI is coming out here on the 10th, and then the Fed meeting I believe is on the 15th. I could pull up the Fed here just to be sure. Let's see, Fed meeting schedule 2022. What do we have? Let's go to the Fed. Let's pull this calendar. over here. So yeah, June 14th and 15th. And usually 15th is the day that they actually do the rates. 14th is like the setup for everything where they start talking about all that stuff. But yeah, so the 14th and 15th. 15th is going to be the big one. This little star next to it means there's going to be some economic projection data included, which is what we want because that'll give us a better roadmap to the September meeting, which is the next time they're going to have projections like that. July is going to be a much simpler meeting. There's mostly just going to be talking about the rate. Well, in theory, at least, they could do whatever, but they're probably just going to be talking about the rate hike and their bond selling, which is the other part of this equation. They've officially, because it's June, they've officially started selling bonds off their balance sheet, which is another thing to add downward pressure into the economy. So there's interest rates, which is what you normally hear about, but there's also the balance sheet. And the balance sheet is just talking about what the Fed owns. And the things that they own are like that crappy debt and some good debt too, obviously, actually a lot of good debt as well, and other securities. Like they basically just act as a way to buy things to prop up the market sometimes. And their balance sheet had a record number of securities on it. So they are not just securities, a record number of securities, which is the blanket term for everything, bonds, stocks, whatever, all kinds of instruments, derivatives. But that balance sheet needs to come down, and that means that more supply is going into the economy. So that's what you got to think about. Is like there's the interest rates themselves, which affects how people borrow money, and then there's the supply of bonds that they're going to be unloading into the market. And that's the important thing is the bonds themselves. When they dump that on the market, that's going to have an effect on everything because the bond market is significantly bigger than the stock market. Like the bond market is actually the thing. Well, I mean, the derivatives market is the thing that rules the financial economy if you really think about it. But in simple terms, the bond market is kind of the one it's kind of what tells you what's going on because the bond market is a flight to safety. It's fixed income. It's kind of guaranteed payments over time, which is great. And you're not going to make as much on a bond compared to something like a stock or an option because you just don't have that ability to move that much, but you're guaranteed. So if you have large sums of money, having a bond is nice because then you can just sit there and collect interest on it. You buy a bond and sit on it and then either take it to maturity and eat up that yield, or you you flip it because bond prices fluctuate too. So you can buy bonds and flip them. There are people that trade them. But that tells you when people are scared, money moves into bonds out of stocks, which is what has been happening as the market's been going down, and even a little bit before. If you look at the end of last year, bonds were already coming up. In fact, some early people were saying like, "Hey, bonds are moving. This means stocks are about to drop," which is why things kind of started at the beginning of the year too. If I go back to the SPY here, let's go to SPY. If you look at where the downtrend started, it's literally the first day of the year, right? We had a nice red candle on the 3rd of July, or the 3rd of January, which was the first trading day, and then it boom, just down ever since. And that makes sense because usually the year end is when people adjust positions. I mean, a lot of times people want to hold on to their investments for over a year so that when they sell, they can pay capital gains tax as opposed to income tax. I mean, because depending upon how much money you have, it's either 15% for capital gains or as much as like 40%. Or maybe even more for income, depending upon what bracket you're in. So holding on to things and letting them go is the smarter way to do it. And at the beginning of the year is when a lot of that stuff happens. I was actually hoping that at the end of the year we would have some tax loss selling, but we we had a pump, which was unfortunate because when things drop right before the end of the year, that's one of the best times to buy. That's when they have terrible positions and they're trying to get out of them so they can take a loss when they file taxes the next year. So some of the gains they made, they don't have to be taxed as hard on. So December is a great time to get stuff. But we didn't have a tax loss drop. We had a pump, which is actually really interesting. So the drop came afterwards after the positions were reallocated. So we're watching the CPI on Friday. We're watching the Fed meeting after that. A lot of stuff coming up. The other thing that's going on, we have a couple of splits. So Amazon is splitting on Monday, June 6th, tomorrow. AMZN. I've been buying into Amazon since the bottom of this dip right here. I really, really liked this drop. It grew slower than it had in like 20 years. I mean, there were so many problems that caused this drop, but fundamentally the company was still good, right? And people are still going to use Amazon. It's still the biggest online retailer. So and a lot of this also had to do with some of the stuff in the brick and mortar retail sector. They were weighing down everything else too. So it looked like Amazon and the big brick and mortar retailers didn't do very well. So there was a big panic, and now it's kind of coming back a little bit because this move was a little overdone. If the market stopped going down, Amazon would probably float back up into this range, maybe the bottom of this, because you look at this, it's very tight right here. Like this one standard deviation line is actually kind of where it seemed to be bouncing before it broke through it. And if you see where it broke out way back here, it went up after an earnings report, or two, a couple of good earnings reports, and it stayed in this range. So the bottom part of this little floor here at like what is that? Oh, there's already got the split. Look at this. It's already got the split factored in. It's no longer 3,000. Wow. So the split is supposed to happen in the morning, but I guess it's already technically showing up on the charts. That's really interesting. Let's see what you got in here. You think Nintendo's splitting too? Do I have a few? Yeah, Nintendo might be going up. I don't look at Nintendo a whole lot. There are a few splits. It looks like let's see, Amazon, Google, and Shopify are the main ones that I was thinking about. But I like Amazon because I've been buying it in here, and I'm hoping that's another reason why I hope there's a pump this week, because what you need for these splits to be a money making opportunity is for the surrounding market to be going up as well. The rising tide has to lift all boats in order for these pumps to work, because people have to be feeling confident enough to start laying down money for these shares. Like, you got to think Amazon, even after it came down, it was like a 2,000 and something dollar company. It was like $2,400, I think, last I saw before this little split readjusted the chart. So you think about like people that are only trading with a couple $1,000s or even a couple hundred, they can't afford Amazon. Now, there are a lot of programs like Robinhood and some other brokers that allow you to trade fractional shares, which is great, because that allows people who don't have as much money to trade companies like Amazon, because Amazon is a good stock to have. I mean, you can say what you will about the company, but as far as the stock goes, it's a great way to make money. So I was buying into this down here, expecting a little bit of a pump, and I thought about selling when everything happens, but I actually kind of want to keep them long term. So I might hold on to my Amazon shares. I may not flip it. Now, if there's a huge run up after this split, like if tomorrow this thing pumps from, where it is up like 10, 20%, then yeah, I'm going to dump my shares and take advantage of that, and, maybe try to get back in, or just be mad that I missed the rally if it continues. But the fact that I'm up so much from where I bought it already, it just makes me think like, oh, I don't know, I might just take the profit on this one. It's kind of what I did with Tesla. I bought Tesla in the low 600s and dumped it somewhere in the high sevens or mid sevens. 'Cause I wanted to hold it long term, but with a nice jump like that, and the fact that I think the markets are going to drop still, I was okay dumping that. And I'm kind of thinking about that with Amazon, but I don't know. Amazon's one that I would love to own. Same with Tesla. They're both companies I'd love to own long term. Let's see what we got in here. Do you prefer buying in before or after a split? I would say before. If you're gonna play a split, because like I don't like to play splits that much. The only one that I've seen that really did well was when Tesla and Apple split at the same time in 2020. That was in the middle of the market mania when everything was still going up. It wasn't that, it was only a few months before the whole GameStop thing happened. So there was this huge mania. Tesla was the stock in the market at the time. It's not quite, it's still a really amazing stock, but it's not in the focus of everybody now. So Tesla doesn't have that same hype around it in the mainstream media that it did the first time, or that it did when it split. And Amazon's kind of the same way. Like Amazon isn't the talk of the town right now. There's not really much of a reason for it to go to the moon, right? So that's why I'm skeptical whether or not this split is actually going to pump anything, because a lot of times splits don't do anything. I mean, if the company isn't well known or something, or if it is well known but it's not like an exciting company, for example, McCormick's, right, the spice maker, they had a split and nothing happened. That was like a year or more ago, and I tried to play that one and nothing happened. I basically got in and out for an even trade. And it didn't really do anything. But you think about like who's thinking about McCormick, right? Do you even know what the ticker symbol of McCormick is? Yeah, most people don't. I mean, I do because I traded it, but I think it's like MCK or MKC, one of those two. But it wasn't an exciting stock. However, Amazon might be, right. Amazon was so expensive, and it's in the news quite a bit, that it might have a chance to pop. So I wouldn't want to buy in after, just because of the fact that I'm saying this is a middle of the road kind of split trade. Tesla was like top shelf, right? Tesla in 2020 split top shelf because it had everything. It was number one stock. It was super overpriced. I mean, there was just so much fuel behind it. Had tons of volume. Amazon's like a tear down for that. So we'll see what happens. Now, the other two that are kind of in the news that people are talking about are Google and Shopify, which have splits later. I'm less confident in those than I am in Amazon, like especially Shopify. That one, I like Shopify. I think it's a good stock to own if you can get into it at the right price. Because I mean, look at this; it was up in the 1700s not that long ago, and that's what I think it's kind of funny. They're doing a stock split, and they've already come down from 1700 to 350. So, and what is their stock split? That is going to be a 10 for 1. Okay, so they're dividing that by 10, so we're going down to like the 30s. That's not bad actually. And what are okay? So here's an interesting question. Let's see how many shares Shopify has. So Shopify has 120 million shares right now. All right, so they're going to multiply that by 10, which means they're going to have 1.2 billion shares. That is a huge float. All right, like I like a float that's less than a couple hundred million. If you can get a float that's less than 100 million, like for example, GameStop is like 70 million. And I think Beyond Meat is also about that same amount. Um, if you can get a small float like that, you have the potential for squeezes, and there aren't enough shares to go around. It's basically scarcity and supply, which is another reason why some people don't like stock splits because they want to keep the supply as scarce as possible in order to keep the price up and keep their profits high. So the one downside to a split is the fact that some people are going to sell off some of their shares. Like if you had a share of Amazon, like let's say you're somebody that only had like 2 or 3 shares of it, right? It's hard to sell one of those because that's like a third of your position or something. But if that share count has been divided by what 10 or 20 or whatever it is that Amazon's doing, then you can sell some of those. But the other side of that is new people that couldn't afford it are going to get into the stock. So in my mind, that kind of balances out a little bit. But the hype around it and what the market does is the most important thing. So if the market pumps on Monday and Amazon has good news, with the split, then it might go, and I might ride that up and make a decision later on whether or not I want to get out of it. But if the market is not looking good, I seriously doubt that Amazon will pop much, if at all. It'll probably follow the market because technically a split doesn't actually add any value. It's still the same amount of shares, but it's a different amount of shares, but it's the same market cap. They just cut the shares down even more. So that's like when you see people arguing about it, they're the people that don't like them are going to go, oh, it doesn't add any value to it. It does. You're right. It doesn't technically add value, but it adds new users, or it adds new shareholders. So to me, that is kind of adding value in some way. It's just not adding fundamental value to the balance sheet or whatever. Okay, so yeah, we've got those two splits coming up. Google is the other one. Um, they've got a split coming up. They're doing a 20-to-1 also, which they're around the 2000s, so that makes sense. Theirs is coming up, I think, at the end of the month or the beginning of like maybe the 30th or in July or something like that. When was Shopify supposed to be? Shopify looks like they're coming in between those. So I think it's going to be Amazon tomorrow, Shopify the week after. Oh yeah, 623. Is that what it says? 628. Oh yeah, so it looks like a couple of weeks. Okay, so yeah, Shopify and Google are going to be a couple of weeks. But yeah, Amazon's the one I'm looking at. I'm not going to worry about Shopify. I'm not going to worry about Google. I don't trade them enough to mess with that. Plus, I don't have enough capital to be buying every stock I want to buy anyway, which is unfortunate because I want to buy so many stocks. What do you have here? Big Trader 2. Makes it easier to a dollar cost average too. Absolutely. Thanks for joining aboard. What is the Brigador LL? Good to have you here. If you have any stocks or anything like that, put them into the chat. We can talk about them. Getting towards the end of the stream here, but I've still got a couple of things I need to go over before we're done. We talked about the CPI. We talked about the splits. We've also got Janet Yellen testifying at the House Ways and Means Committee on the 8th, which is Wednesday, I believe. That could move the markets a little bit. Anytime the Treasury Secretary or even sometimes just the White House press secretary talking can move the markets a little bit. It depends upon what they're talking about. So I'm going to be watching that a little closely to see what she has to say. My guess is not much. It's probably going to be very mild. Janet Yellen has a way of not saying things that are too outrageous She doesn't really want to move things that much. She's more about keeping things stable, which I understand. So I'm not expecting much from it, but I'm going to keep an eye on it. So that's something to watch on Wednesday. Let me look at a couple other things. Oh, a couple of random stories before we get out here because I got to get going, getting past the time here a bit. So if anybody knows who Melvin Capital is, look like they're going to be shutting down. And actually, this is a story from a couple of weeks ago. I completely missed it, but I thought it was kind of funny. So Melvin Capital was the firm that was extremely short GameStop when the whole thing happened. So when GameStop, just to give you a little an idea of what this looked like, when GameStop pumped up huge like that, Melvin Capital was holding a ton of short shares. And they basically were out, I think, $2 billion at their low. It was really bad, and they weren't the only ones. But because they were so heavily short on this, when Wall Street Bets kind of pushed them around and got everybody to diamond hands the stock, they had to get a bailout from another company. I can't remember what company it was. I think it was Citadel, one of the major firms. So that they kind of bailed them out a little bit, but I don't. They released a letter that was kind of funny. They basically said they got they have PTSD from being squeezed so bad by Wall Street Bets that they weren't able to perform their duties anymore. It was the funniest thing I've ever read in my entire life. I couldn't believe that this whole thing happened. These companies that do this kind of stuff, and they short positions, and then they put their little news media feelers out there to get people to pump negative stories into financial media to scare average investors. Like anything you watch at CNBC is usually some hedge fund saying like, oh, I don't know how I feel about the market at these conditions, and this stock right here, oh, it's got a lot of downside, they have a lot of money to blah blah blah. They're doing whatever they can to push those things down. So seeing a company like that just get obliterated by some people on the internet that noticed the short position was too high is hilarious. And the problem with GameStop was the short position wasn't just high. Like a high short position would be like 20-30% of the float is short, right? GameStop was 140% short, which means more shares were short than physically existed. That's why when people had to cover, there were no shares. Borrowed shares were being loaned out to other people to borrow. It's unbelievable to me that things went that bad. So yeah, they're Melvin Capital, basically they were kind of crying, Wall Street Bet traumatized us, so we can't trade anymore. Well, there you go. That's what happens when you play the game. Just be cool about things, and karma kind of got them a little bit. And it's like they're not the only one. That whole GameStop thing wasn't just them. People like to demonize them and Robinhood and because they have ties and everything, but like the whole market was complicit in this. It wasn't just one firm that did that. And the reason it went up so high, it wasn't just because a couple of people on Wall Street Bets were doing it. It was because other giant firms were jumping on the backs of those Wall Street Bets traders and causing this huge move. So that was pretty hilarious. So let's see what other stories that I have before this goes. So it looks like the residential market might be softening a little bit price-wise because of the increased rates already. And we're in the slow season when it comes to real estate anyway. So you really never know if that's going to last. But the cooling down of prices is a good thing. That's one of the things that needed to happen with to help with inflation as well. So there's a possible softening in that market. So we're keeping an eye on that. And I think the Fed when the Fed data comes out, we'll get some more of that. The other thing. Oh yeah, so the travel and leisure section is actually doing really well right now. Hotel stocks and Airbnb, things like that. In fact, what are they looking like right now? I haven't looked at them. Airbnb. Yeah, Airbnb. Oh, see, Airbnb is looking nice down here. I mean, it's kind of at its lows, but here's a story that makes me think that the travel sector is a little underappreciated. Virgin Atlantic, the airline, is relaxing their tattoo policy for their workers because they need to hire more flight attendants. So basically, they're like, oh man, we need people, and we can get more people if we relax these requirements that we've had for so long. So that tells me that they're going to be, because they said they would hire like 300 new attendants or more or something like that. And that's just one business talking about hiring people. I've heard a lot of rumblings about things doing well in the travel and leisure sector. In fact, some of the positive economic data we had mostly came from that sector. So travel is picking up. So things like Airbnb, that's another one I like. I don't own Airbnb, and I'm probably not going to, but that's one that as things drop, it becomes a better and better buy, especially if things continue to go. And if there is another lockdown, Airbnb is much safer than the hotels because Airbnbs were being used as a way of isolation, where the hotels you have everything's clustered together. You have to go by other people to get to your room, and other people have to come in and clean it and blah blah blah. There's a whole staff that deals with everything. Whereas an Airbnb might just be some dude's pool house that they don't even go in. So you could use it as an isolation type thing and still travel to do what you need to do. So Airbnb being low is a nice one if I ever decide to get into it, I might do that, but I doubt it. So I guess the last thing I want to talk about here is some Chinese stocks. I had some people talking to me about some Chinese stocks they were in and weren't sure about what to do about them. The situation is interesting right now because China's on the huge lockdown, but they're easing it. Like Shanghai has eased a bunch of their lockdown measures, so things are opening back up. I think Starbucks has a few of their locations back. So when you see things like Starbucks opening back up, then that's kind of telling you that things might be relaxing a little bit. So that's bullish in the sector. But there's a lot of regulation stuff right now that's making things a lot cloudier. So it's really hard to see. However, let's see. I like Alibaba. Like Alibaba and Baidu, I think are two of my favorite Chinese stocks. And look at how low this is. I had this nice trade on Alibaba when it dumped right down here into the 70s. I bought it literally on this day that it was like 74, 75, and I sold it a couple of days later in like I think 105, something like that. Yeah, 105. So somewhere around here. It was a great. I didn't expect it to do that, but I was when it was getting this low, it was looking so nice, and it's still kind of in that range. It's bounced a little bit, but as it comes down with the fears of Chinese stocks being delisted in some ways, if they don't come to an agreement for how to report. And so it to me, this is when if you're into something risky, if you're looking for a place that's risky, but you could to put money or whatever, like a good Chinese stock may be something to consider. I'm not, like I said, none of this is financial advice or advice to buy or sell anything. You have to figure that out on your own. I just want to reiterate that so people don't think I'm telling them to buy this, buy this. Everything I say is, like I said, it's just an idea. It's something to look into, something to consider. And Chinese stocks right now, I think, because people hate them so much and they're so afraid of them, if you look at letting into them slowly and carefully, I think they're not bad. I would like to get into Alibaba, and I'd like to start slowly adding shares. So if we get a little pop in the markets and then some downward movement, Alibaba is one I am definitely going to be adding into. Like if I can get down into the 70 level again, that would be wonderful. I mean, look at we have a lot of support in this area. There's high volume. So and once things pick up, once China restrictions are lifted, Alibaba just goes to the stratosphere because I mean it's the Amazon of China. I think it's if it's not the biggest company, it's one of the biggest companies there. And I have a great balance sheet, good business model. Like I like Alibaba, so I'm looking at buying those if I can. So there were so here's one thing that is difficult about China. There's a bill it's going through Congress right now. It's the Uyghur Forced Labor Prevention Act. It's supposed to take effect on. Oh, that's right. Maybe it's already been done, and it takes effect on January 21st. China is basically warning the U.S. not to enforce that, but that bill is saying any product that comes from Xinjiang, where supposedly Uyghur Muslims are being used as slave labor to create things, the Chinese government has to prove that those items weren't made with slave labor in order to sell them in the United States. So if they can prove that it wasn't, then it's not a big deal. But that also means like even if none of this is going on, which from what it looks like there is some of it going on, depending upon your political affiliation, you think it's one way or the other. But if I mean, I consider myself more center, and to me, what it looks like is that there's probably something weird going on. I don't know for sure, but there's a lot of there are a lot of reports and there's some evidence of things that just makes me think like, they're not reporting everything that's going on. There's definitely something shady. Whether it's what people want to say it is, like extreme slavery or whatever, I have no idea. But this bill going into effect will make China have to prove that this stuff wasn't made with slave labor, which at the very least is going to cost them something, which is going to make it harder, for these companies to make a profit. But one thing that's bullish is the SEC is trying to change the regulations that Chinese companies have to fill out in order to
to be listed on the American stock exchanges, and they're trying to make that more lenient so that they can keep these companies going. And if they do, then that's going to be incredibly bullish. So there's just so much, so much volatility in Chinese stocks. They're so beat up that I like them. Like my two favorite sectors right now or three favorite sectors are the cannabis sector because it's been beat up for a while, cryptocurrency because it's been beat up, and for Chinese stocks specifically because they've been beat up. They all have potential to run in the future, but they're all down quite a bit. So I'm loving this environment. Last year I was just sitting around, prices were going up. I had no idea what to do. I was so frustrated because I don't like buying when things are going up, because every time I buy when they're up, they go down. Now, I could have just bought while it was going up and it'd be fine. And dollar cost averaging while things are going up is still good. But I was putting a little too much in for things, so I didn't want to move. Now that everything's dropping, oh my God, I'm buying every couple of weeks, every time I can. If I sell when a trade finally comes through and I make some profit on it, I move that money over into my long positions. And any outside money I get, I put it into the long positions and maybe a little bit into my trading account, but mostly that's what I'm focusing on. I want more shares. I want more shares and long term and leaps, long term contracts. That's what I'm looking for. So I need to get going here. It's running a little long. I didn't even get to everything that was on my sheet. There was so much going on this week, but it's really I really appreciate everyone that's been coming in and watching the stream. There are a few people that are here every week. Future Space G, Shalom Fish B, Kajichi, and Ash and Phoenix. You guys are always here every week, and I appreciate that. That's so awesome. And I'm hoping to see the new guys right here, like Brigador LL and dogshit.inu or whatever, dogshidlanu. I can't read that. I'm hoping to see you back next week because this I want to turn this into a community, and anything you want to talk about, I want to put up on the screen. Because like I think it's better to have multiple viewpoints on something, and I think we could learn from each other. And the more people that are in here, the better. I mean, the more viewpoints we have, the better. So if there's any questions or any comments or anything you want to talk about before I go, throw them into the chat real quick. Otherwise, I need to get going here. My son's having some dinner, and we've got some appointments coming up, so I got to get going. But it was a great week. I mean, even though I didn't really make anything, I had that one loss. There was still so much that came out, and the picture is so much clearer for the next couple of months that I'm glad that we're at the spot that we're at. So keep your heads up. I mean, even though it's going down, it really sucks to see your portfolio dropping and dropping every single day. But this is the market we want to be in. This is a good market because we're just preparing for the next bull market, right? Crypto's next bull market could be extreme. I mean, the stock market itself could go up, but if you think about how crypto moves, the moves are very similar each time and in percentage, which means the price action is going to be a lot more for each move. Is that definitely going to happen? I have no idea. But I want to be in position for the next one. So all these things that are going down, I'm adding too slowly, waiting for the next bull market, waiting for those people that didn't know what they were doing and were just gambling to come back into the market and lift us all up. So with that being said, I think I'm going to get out of here. It was awesome. Have a good weekend. Good luck trading next week, and I will see you next Sunday at 3 p.m. Pacific, 6 p.m. Eastern. And bring any stocks, anything you want to talk about. We'll get that all done. All right. I'll see you later.